You said the rally wouldn't break, said the floor was safe to stay. Now the bids just fade away, and I'm watching screens decay. All that noise, it pulled me in. Every high felt permanent. Now the charts don't mean a thing, just a slow collapse again. You told me trust the move, said he had it under control, but the tone changed overnight. Now we're slipping out of hope. I don't wanna back hold through this. Watched it all unwind. Thought we had the upside locked in. Now we're out of time. You kept saying it was nothing, just a shakeout line. Now we're drifting in the downside while it all unwinds. Every speech just moved the tape, every word was swing away. Bought the spike, I chased the flame. Now there's no one left to blame. Positions turn to ghosts at night, margin creeping, closing tight. All that green was just a lie, now it's bleeding into mine. You said don't fight the trend, said the system wouldn't fold, but the cracks were always there, we just never saw them show. I don't wanna back hold through this. Watched it all unwind. Thought we had the upside locked in. Now we're out of time. You kept saying it was nothing, just a shakeout line. Now we're drifting in the downside while it all unwinds. Late feels, red ticks through the night. Nothing left to justify. We were dancing on the highs. Now we're watching it all die.
Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where we're starting a bit early today because we are getting an important inflation report. I am talking about the PCE index, just inflation, PCE. It's important. PCE prices coming out in a mere 4 minutes. On top of that, we're getting GDP. On top of that, we're getting initial jobless claims. That's why we're starting early, because we have an important data drop. Fingers crossed, knock on wood. I really am excited more so to see if Rick Santelli will be speaking with us today. So I'm hoping he's the one reporting the data. It's always a good day when we get to listen to our boy Rick. So that's honestly why I wanted to get rocking with all of you today. So hopefully, and I don't want to get anyone too excited, but hopefully we're going to get some Ricks in chat today. If he's actually going to be here. On top of that, I have some major news to be breaking down in terms of the state of the global economy, the markets, updates with Iran and Trump and everything in between, a little bit of individual equity news. But since we're starting early today, I kind of enjoy these days because it gives us a little bit more time as a community to kind of be breaking down some of the major setups of the trading session. It feels like we could be a little bit more prepared on days like this. So I do appreciate you joining me this early. Thank you. There's a couple things I do want to get into very early. First of all, today is the final day of Apex's 90% off. Yes, you heard me right. 90% off with code Goonie. The reason I'm bringing it up to you right now is because the movement that we're about to see in the market is most likely going to be enough movement, if you get the direction right, to be able to pass that eval in a one-shot attempt. So you do have about 2 minutes left. If you are on Apex, use that code Goonie, 90% off. Today is the final day, and I have a sneaky suspicion that whatever the movement is, you're probably going to be able to pass that test if you can get on the right side. Unfortunately, you can no longer do the 50-50 where half are long, half are short, where you're pretty much guaranteed, not exactly, but high odds chance to pass at least half. So yeah, you need the aspect of luck to get the direction right, but on Apex, there is still the one-day pass, and you're able to take a shot at that, and hopefully you can be lucky with that code Goonie, but that is going to be dropping in a little bit. Where are we at? You have 1 minute, so you're going to have to do it relatively quickly, and obviously, I wish you Godspeed. So let me see if I can get our boy up, Rick, because he's going to be starting pretty soon. Why does my voice seem uniquely echoey today? Echo. Doesn't it feel extra echo? Feels. Maybe it's just me. Maybe I'm like finally losing my mind. I don't know. But anyway, our boy Rick is going to get popping off pretty soon. Let me get over to this side. My hair looks a little crazy. It feels as if it's oddly... Hey, Becky. Bullish or bearish? Bullish or bearish?
We're watching pretty closely after that stronger than anticipated jobs report we got on Friday. Take a look at what's happening with the futures this morning. Obviously, a huge day for the markets yesterday with the Dow up by over 1,300 points. This morning, the Dow futures are down by close to 150 points.
Look at this clock.
S&P futures
3,
were up by about
2,
2.8%.
1, boom.
The S&P was up by 2.8%, is now indicated
I
off
guess
by about
bullish was the
points, and
answer?
the NASDAQ, which
We're
was
going
also
up.
sharply higher, indicated off by 38. If you check out Treasuries this morning, you will see right now that the 10-year is sitting at 4.29. The
initial jobless claims coming in pretty much at expectations.
Rick Santelli is standing by.
There's our boy Rick.
In Chicago.
Give us Rick.
And Rick, these are some big numbers, but
give us
probably
Rick
the
or give
PCE
us
is the most
death.
important.
Yeah, I think the PCE is important on GDP. It's kind of the third time around the block. Initial continuing claims, always important.
We're going.
And then
It's holding.
CPI tomorrow, and here we go. Let's start out with jobless claims.
Look at this guy.
Populating on the screen.
A gentleman
First,
and a
initial
scholar.
Claims expected around 210,000, coming at 219,000. That would be the highest level going back to the first week in February.
Let me bump their
If we look at
volume up a little
continuing
bit. I think
claims,
they're a little
they come in
soft.
below 1.8 million. 1,794,000. That
There
would
we
be
go.
the least going
Volume
back
good?
to.
Give me a
Boy,
thumbs
I really
up if
have to go
volume's
back.
good.
That's the lowest since May of 24. Now, let's look at personal income. Down 0.1%. We're looking for a positive number. That would be the weakest number since Dece of last year. And if we look at spending side of the equation, very close to expectations. These are Feb numbers, of course. Comes in at up 0.5%.
And a drop.
If we look at real spending, up 0.1. We're looking for up 2%, 0.2%.
Little pop, little drop.
Up 0.1 actually equals our last look. To find a higher number, you're back to October. To find a lower number, you're in May of last year. Here we go. PCE.
What's
we go
the PCE?
short game first.
Inflation.
Month over month, up 0.4 as expected.
Okay.
That's 1/10 hotter than the rear view mirror. That equals Dece of last year. To find a higher number, you're going back to January of 22. Excuse me. January of 24. Now let's look at the year-over-year PCE. That's coming in exactly as expected and exactly as it looked last month, up 2.8%. Core, strip out food and energy, month over month, up 0.4 as expected, equals our last look. Year-over-year, 3%. That's exactly as expected, 1/10 lighter than our last look, and that would basically equal Dece of last year. To find a lower number, you're in Nova of 25. GDP, we've seen the fourth quarter a few times. Don't expect significant changes, but I'm always surprised. The 0.7 now turns to 0.5, 0.2 revision, but it doesn't change the dynamics. Still the weakest quarter since the first quarter of 25 when it was a slight negative number. If we look at the consumption side, we lost 1/10 from 2% to 1.9. That would be also, it doesn't change the perspective or the context. That would be the weakest consumption since it was single digits, up 0.6 in the first quarter of 25. On the pricing side, the price index stays at 3.8, and the core PCE 2.7 as expected and as the rearview mirror. After synthesizing all that data, and I continue to say that markets synthesize data the best. Why? Look at all the betting sites and probabilities we talk about every day. You back things with money, usually get better, at least at the moment, more accurate results. So what we're seeing is we're hovering at 429, a whisker under 430. So that has popped up a little bit. But all things considered, treasuries have been pretty compact considering the volatility encircling those markets. And the 2-year's hovering near unchanged, 378. Key levels, 380 on a closing basis for 10-year, and I would also use it as a pivot for 2-year, and for 10-year, 4.30%. Don't forget, we have the last of the Treasury coupon supply, the third offering, $22 billion reopened 30-year bonds originally released in early February. Joe, Becky, and the gang, back to you.
Joe, Becky,
Rick,
and the gang, back
what's your takeaway from that? Because I agree with you. The market didn't do a whole heck of a lot on that, which makes me think none of this information was all that shocking. Important, but not shocking or surprising. Am I wrong to think that?
No, I don't think you're wrong to think that at all. And I know that, the crude oil seems to be playing the tune that everybody's marching to. But you have the treasuries marching at a much slower pace. You have the equities marching at a much quicker pace. The dollar index, of course, is starting to slide a bit from its, flirting with that 100 on the dollar index. Here's the way I look at it, Becky. We had a sticky inflation problem. Now we add into that a questionable inflation issue into the future. And like tariffs, there's a lot of talk about how ugly it could be, but we have to wait and see if it actually proves to be ugly. And the war costs money. And it seems as though we could argue about all the various policies of this administration. Many I largely respect. But it doesn't look like we're paying down much of the red ink. So there's this lingering issue in the treasuries that it's going to be looking at the strength of the economy, because the only way to get rid of the red ink, Becky, is to grow your way out. And some of these GDP numbers aren't pointing in that direction yet.
Why do you think treasuries have behaved so calmly with all of those things happening relative to what we've seen with oil and with equities and everything else?
Well, I think that as our debt has grown, foreign interest hasn't waned. It just gets smaller as the pie of debt gets bigger. And many domestic institutions, like insurance companies, continue to take up that slack. And I think the complexion of the players and how many treasuries are actively traded versus how many kind of go into portfolios, I think those metrics are changing a bit. So I think ultimately the sideways movement in interest rates in the U.S. largely reflects the fact that it's not the big flight to safety issue, because many things in this Mideast conflict are rather unique, and that takes away a big part of the volatility. And on the growth and inflation side, which also gives the market a volatility, there's a lot of question marks. I think that explains it.
Okay. Rick, thank you. Rick Santelli.
Thank you.
Now let's get to our panel. Joining us is Wendy Edelberg, who is non-resident senior fellow at the Brookings Institution.
A little up,
and
a little
Michael
down,
Faulkner,
recovering.
who is former U.S. Deputy Treasury
movement.
Secretary under President Trump and co-chair of American Prosperity at the America First Policy Institute. Wendy, Michael, welcome to both of you. Why don't we start off first with these numbers? Wendy, anything that really jumps out at you? And by the way, let's add in last Friday's big jobs report as well, which was much stronger than had been anticipated. What do you take away from these most recent data points?
I think the most important number we just got is the inflation number for goods. So goods prices in February were 0.7% higher than they were in January. That is a very large increase. If you annualize that, you're above 8% growth in goods prices. We are nowhere near done with seeing how tariffs are going to eat at consumers' purchasing power.
And that was before we saw the impact of sharply higher oil prices, too.
That's absolutely right. I mean, I think in some sense we are overplaying how much the increase in gasoline prices is eating into households' finances. We're probably talking about an additional $70 a month for the household budget. That's not enough to derail their consumer spending plans. But the economy right now is being buffeted by so many different cross currents. Trade policy uncertainty and geopolitical risk, what's happening with energy prices, all of that should be paralyzing business investment. But then on the flip side, we have a deregulatory environment that may turn into a pumpkin in November. And so firms are no doubt scrambling to take advantage of that environment while it's still really good for them. And then
that would be
consumers,
quite the twist.
We talked about inflation, we talked about tariffs, we talked about energy prices, but then tax refunds are running about 15% higher than last year. There's a lot of stimulus that is coming out of the One Big Beautiful Bill. So that's helping consumers. And then immigration is dampening consumer spending, probably to the tune of $40 billion this year relative to last year. So there's a lot going on in this economy because of policy.
Michael, your take on this, and Rick points out this stubborn inflation that was sticking around before. How big of a concern is that for you?
Yeah, I tend to agree with a lot of what Wendy just said, because, you think about the effect of energy prices. A lot of people think that if you go look at the core number that you eliminate the energy piece. But of course, energy impacts so many other parts of the manufacturing sector and into services that this, even if they're temporarily higher prices, we're going to see hits on both CPI tomorrow and in the PCE number we just got. When the number I was mostly looking at, I was a little surprised by the personal income number. As Wendy just talked about, the tax refunds should have been in the disposable personal income number, and I was surprised by the reduction that we were seeing. I thought households would be doing better this month. In terms of last week's unemployment report, I continue to think that the standard ways that we evaluate the jobs report has completely shifted, because we're in a worker constrained environment. It's much more a reflection right now of labor supply than it is of labor demand. And so when you look at, there's lots of jobs growth. It's a lot of it in healthcare, not surprisingly, because we have an aging population. But what tends to be keeping it down is that we are seeing just an insufficient number of skilled workers that can take on a lot of roles. And so I think that there is, because of the policy changes that Wendy mentioned, I think there is a lot of growth opportunity still in this economy, with the tax refunds going out, with the deregulatory environment. I think irrespective of how the election goes this fall, the administration has a lot of authority to continue on its deregulatory path, really removing a lot of the barriers that have kept back growth. But again, getting resolution on the war in the Middle East, getting resolution on what final trade agreements look like is going to be essential to giving business the confidence that they can make all of those investments that are being incentivized by the Big Beautiful Bill.
Yeah, Michael, it's not just this administration. You can look at any administration, and there are always so many other variables that change, so you can't very closely follow exactly what happens with deregulation or regulation. Look, last year it was the tariffs that threw everything into disarray. This year it would be the war. It's going to be hard to track exactly what all that means. But you think when you add it all up, we'll be looking at decent growth this year or not?
I think that there were a lot of tailwinds going into this year because of the deregulation, because of what we were doing on domestic energy supply, because of the tax bill. And so that can offset some of the temporary implications, presuming that the Middle East conflict goes as the president has outlined under the time frame that he is describing. If that entirely gets resolved, and if you look at oil futures markets, it seems like it's going to get resolved in the next couple of months. If that comes to fruition, we'll see a temporary increase in CPI and PCE, though the PCE price index. Those will come back down later in the summer once the situation on the Strait of Hormuz.
All right, we have a little bit of breaking news from Donald Trump. None of these people, including our own very disappointing NATO, understood anything unless they have pressure placed upon them. So not directly tied to the market, but it did cause a quick pop and drop. That was literally this movement right here. Pop, drop, the old Donald J. Trump True Social update just came out literally in the past 60 seconds.
Friday's trend, Or do you look back over the last 3 or 6 months and try and add up the surprises to the upside, the surprises to the downside? Where do you think we are in the labor market right now?
My intuition is that what we saw Friday was mostly noise and less signal. You might think that the strong employment number was consistent with the decline in the unemployment rate, but in fact, the number of jobs in the household survey, that where we get the unemployment rate from, fell, didn't increase. So the unemployment rate fell for totally different reasons, and in fact, mostly depressing reasons. It was the number of people who dropped out of the labor force. So, it's hard to know what to make of one number, but I totally agree with Michael that I think the most important thing that's happening in the labor market right now is that we essentially have no labor force growth. We are going to have to get used to employment break-evens of about zero. Mm-hmm. And so that's going to confuse people and create some cognitive dissonance. The one wild card here is what happens to inflation. When Michael talked about inflation coming down over the course of the year, there I disagree with him. I think we still have a lot more inflation in train, and I suspect that inflation over the remainder of 2026 is going to start with a 4.
Trump
particularly once Governor Warsh is confirmed. You have a president who is adamant about having a seat at the table for monetary policy and clearly wants interest rates to be reduced by perhaps a percentage point. And I would be very surprised if he put in place a chairman that did not achieve those ends. And I think that helps to keep inflation higher over the course of 2026 and beyond.
Michael, quick last word.
Yeah, I think that I totally disagree about where Governor Warsh, or hopefully Chairman Warsh, is going to take interest rates.
Tell her to kick
when
her
it comes to inflation, I think we need to realize that shelter inflation has really driven the number for a while, and some of the leading indicators on new rental contracts are that rents are actually coming down, and that's going to put some downward pressure on the CPI number. And again, I do think that if we get quick resolution, I'm not a national security expert, but if we get quick resolution to the conflict in the Middle East, I think that's going to resolve some of the energy price effects on inflation, and that can be overall beneficial to continuing to bring down inflation.
All right, we'll see who's right. Michael, Wendy, thank you both.
Who are they bringing on next? Anyone good?
Okay, folks, coming up next, a former White House senior advisor, Amos Hochstein, who's going to talk to us. He knows a lot about what's going on.
Call me old-fashioned, but I do not trust anyone named Amos Hochstein. That Amos is not a real name. It's not, dare I say it, not even a real word. So my best assumption is that is an AI system sent from the future, and he somehow finagled his way into being a White House senior advisor. So I know a scam when I see one. I am not listening to that. Amos is not, dude. Don't even try to tell me that Amos is a real name. Like I know a real name when I see a real name. That ain't a real name, brother. It ain't a real name. So we're not going to be getting tricked into listening into that one. Stock futures slip as oil rises. Traders keep an eye on U.S.-Iran ceasefire. So obviously that is the major news that people are paying attention to. But a few minutes ago, now the market's popping again. Interesting. We did get the PCE report, came out perfectly at expectations, month over month, 0.4, year over year, 3. GDP, little bit less of what we saw or expected, 0.7 when they were looking, they were looking for 0.7, came in at 0.5. So we simultaneously have a weakening labor market and a shrinking economy where inflation is being a little bit stubborn, probably because of the rise of just oil right now. That's not going to be helping anything. So by no means whatsoever would I ever campaign saying, yeah, this is full on like hyperinflation, this is full on stagflation. But clearly the market is starting to say, all right, that's not exactly what we want. So weakening labor market, shrinking economy, stubborn inflation, not necessarily the ingredients you want to be cooking up a bull market with. Obviously, as quickly as next week or the week after, things can change. I understand the situation is incredibly dynamic, but just in terms of what market and traders and high frequency traders and people are reacting to as of 8:30, not necessarily the best slate of information. Obviously, we've also seen worse, but I would say it has a little bit more of a bearish tune. But I think by 9:30 this morning, it's going to be rapidly forgotten, and it's going to very quickly come back to what is happening with the U.S.-Iran ceasefire, which we do have some news there. So just wanted to cover why we're starting early, the data that came out. With respect to today, later on, 1 p.m. Eastern, you're going to get the 30-year bond auction. Once again, 1 p.m. Eastern, 3 hours before the market closes today, 30-year bond auction. You might want to just remember that if you happen to still be in a position, especially if you're trading bonds or yields or the overall market, might want to be paying particular attention at 1 p.m. Remember, these bond auctions are actually Dutch auctions, so that means they start at 1. So you don't really get the results for about 3 to 4 to 5 minutes. And it's, if you want to look it up, it is the style of the auction is a Dutch auction. It starts at 1 p.m. You get the results rather quickly, 103, 104, and 105. Just want to call that out to everyone. Tomorrow, more inflation, CPI, 8:30 a.m. ET. Also at 10 a.m., there's consumer sentiment. So between today and tomorrow to really round out the week, the first full week of trading in the month of April, obviously some important stuff going on. So just wanted to give you the skinny of what's happening right now. But obviously the biggest context is Iran. Trump allies and U.S. officials fear Iran victory lap is premature. Among the top concerns is Iran's refusal to fully open the strait. So the hot news of the day and yesterday and probably of tomorrow is we are in like a very, very finicky ceasefire with Iran, where technically it's a ceasefire, but it feels like we are just one errant message or button hit or update away from the ceasefire ending. So it is built on a very shaky foundation. Iran tightens its grip on the strait despite ceasefire. Trump demand opening the strait. Tehran's Revolutionary Guard is limiting ship traffic and charging tolls. So right here, you have Oman, you have the UAE, you have Iran up on top, and here's the strait where many, many oil tankers pass through. And it's at the point where the most recent news, at least related specifically to this, is that Iran's army will, individually escort people through the strait. So they're keeping very much a tight grip on the region. There's a lot of talks of tolls. The recent number that I read was $2 million per ship. Could that be true? Maybe, maybe not. Could it change? Maybe, maybe not. I'm just letting you know the recent stuff that I was reading. And I'm kind of prefacing all these updates with the fact of you got to kind of shrug your shoulders because it's a very, very dynamic situation. Iran deputy minister says ship needs army consent to pass through it. So obviously a recent update, and the other recent update is that from Iran's side, they're saying that the U.S. already violated the ceasefire. So that's important context. And that's actually exactly why midday yesterday, you started to see this random drop. So starting at 2:15, that drop was actually more so because of, oh, wow, apparently we violated it. Now, it did apparently not hold, like the market is telling you it didn't really buy because the market literally popped into close. But just trying to give you the major TLDR updates on the situation.
Let's start with the fragility of the ceasefire then, Waylon. I mean, what kind of signs are we getting as to whether this ceasefire is holding? Because it seems, as we don't have clarity, oil prices just drift slightly higher.
Right, and that's true, right? What we have heard are just top headline news saying that there is a ceasefire, but the shape of how that looks like still remains to be seen. We still hear of like attacks, Israel, Lebanon, and also yesterday Iran said that one of the refineries was on fire. So things still look pretty shaky, but I mean, it's been a day. Let's see how things develop from here. But what we know in the Strait of Hormuz that has been a big focus of this hostilities and conflict is that things still remain pretty much locked in a state of lockdown, right? Ship owners are still saying that they don't see any improvements in traffic, and we still don't have any further clarity on how easy it is to move through the strait. Instead, what we have is Iran really tightening its grip over Hormuz, even after the ceasefire. So all in all, the ceasefire still looks pretty fragile.
Okay, so the ceasefire is fragile. So what are ships doing? I was reading a report earlier suggesting
chilling.
that some Chinese vessels were attempting maybe to navigate the strait, that they were obviously sort of beaming via their transponders the fact that they were Chinese vessels. What do we know about those kinds of vessels and what they're doing?
So what we have are two large, very large crude carriers, the largest of their own kind, and they're carrying Iraqi and Saudi crude. They have been in the Persian Gulf since the war started, and only now are we seeing them moving from the middle of the Gulf toward nearer to the exit, or rather where Strait of Hormuz is. And this, I think, shows a sign of a lowered perceived level of risk. It's what the perception that the company is having, and this coming from a state-owned, a state-backed Chinese company, which is called Kohrs. It's known to be very prudent and conservative. So for them to make that move nearer to Strait of Hormuz, perhaps shows their willingness to find a chance to exit Hormuz at the earliest sign possible. And this, of course, comes back to what we saw yesterday with the ceasefire, that they think that it might be reopening soon, anytime soon. But for now, things do look pretty much the same for everyone in the Gulf.
Quick question. Does anyone find it interesting that Oman is like separated as a country? So you have Oman down here on the bottom and then Oman up here right on the tip. So I'm sure there's some very interesting historical fact and development of why Oman as a country is split. But this is something I recently learned in my life because of this whole ordeal and really looking at the geography of the area, that Oman as a country is disconnected. They have this piece of land and this piece of land, and obviously the UAE must have, I'm assuming, come in historically and push its way to be on the Gulf of Oman and take over that region. But just wanted to point that out. Maybe someone in chat knows why that happened, but I just thought it was interesting.
And Waylon, sticking with the shipping theme, we understand that during peacetime, 135 vessels, I think, would pass through the Strait of Hormuz. What kind of expectations should we have if we manage to hold on to a ceasefire and reopen the strait, given that there could be mines there, the Iranians want to control the flow? What kind of expectations do we have about how much of a rebound in traffic we can expect to see?
Why is their mic sounding so weird?
Right. I think
because
it all
racism,
boils down to how much
maybe.
Iran wants to let ships through. Because yesterday, after the ceasefire, Bloomberg News, we obtained a recording from a ship nearby that said that Tehran still said that the strait was pretty much in lockdown mode. And then we have Iran coming out with alternative routes to exit Hormuz. This was all after the ceasefire, and they insinuated that there might be mines in the strait. So what they're trying to do is
the
still
Oman thing
trying to
happened in
control
the
the traffic
70s,
that goes through, and
the
that
770s
means that Tehran has control over who's going through.
Okay, this is the other thing that I wanted to talk about, of how even though there's a ceasefire, Israel's still slinging some bombs at Lebanon. So this gives you an idea. Between yesterday, overnight, and this morning, even though we're getting this idea that the strait's going to be open and there's going to be safe passage, it seems very fragile. The foundation of what's happening in this ceasefire, it does feel as if it could end any second. We're not only hearing that from Iran, we're hearing that from mainstream media, and even the vice president, J.D. Vance, says the whole thing's very fragile. The reason I'm bringing this up is maybe don't be overly confident in any large positions you're swinging overnight or especially over the weekend. Now, obviously, fingers crossed, knock on wood, that everything does improve and the strait opens and life globally is easier and tensions simmer down. I guess I just want to be honest and open and transparent that the situation right now, it's not like hunky-dory, we're singing hands or we're holding hands singing Kumbaya at the campfire every night. It is very much not that whatsoever. U.S. has violated ceasefire agreement, Iran parliamentary speaker says. So this is why we had a little bit of a drop right here. Now, once again, just to be fair, we did get a recovery from that. So through the terms of the market, the lens of the market, they're not really buying this, but this is why we saw a bit of it. Iran parliamentary speaker Mohammed something that I'm going to butcher, so I'm not even going to try it, accused the U.S. of violating the ceasefire agreement. He said that the U.S. had violated 3 parts of Iran's 10-point proposal that President Donald Trump had accepted as the basis for negotiations. The U.S. and Iran has also appeared at loggerheads over how traffic through the strait should be managed. Dude, I swear, whatever intern is ripping this at CNBC these days, what was the other one that we just saw, like, tether something the other day? Like, they're just ripping words, man. They're just calling up Webster and saying, we got a new one for you. So this is another thing. I'm just trying to illustrate the fact that things are trying, like we're almost like pulling both sides to the finish line of we got to get this done. But apparently both sides are coming kicking and screaming.
Today, Eamon Javers got some breaking news on the ceasefire agreement between the U.S. and Iran, and maybe it's not related to a ceasefire at all, Eamon Javers.
Yeah, Brian, just wanted to flag this social media post for you that just dropped from the Speaker of the Iranian Parliament as we watch whether or not this ceasefire, as fragile as it is, can hold. In this social media post, the Speaker is alleging that the United States has violated 3 of Iran's principles for a ceasefire already so far. They say that the Iranians say that the United States has non-compliance with the first clause of its 10-point proposal, that the entry of a drone into Iranian airspace violates the terms of the ceasefire, and denial of Iran's right to enrichment, which was included in Iran's framework, they say, also violates the terms of the ceasefire. Now they say now the very workable basis on which to negotiate has been openly and clearly violated even before the negotiations began. In such a situation, a bilateral ceasefire or negotiations is unreasonable. So you have here the Speaker of the Iranian Parliament now saying that a ceasefire and negotiations are unreasonable due to what they say are American violations of terms that the Iranians have laid out there. And this is one of those situations, Brian, where you might want to look at sort of deeds more so than words, watch what the Iranians do over the next minutes and hours to see if there's anything behind this. But just wanted to flag that we are seeing this kind of skeptical language now from the Iranians around the ceasefire.
All right, so that was, and I thought the ending of that clip was the most useful of, hey, let's actually see actions rather than words. And you could see from the action standpoint, from the market standpoint, that it didn't really amount to anything. Quick little side note, Piper, you gotta chill. You gotta just hang out. For any of you who are stupid like me and was not hooked on phonics as a child and you don't know what loggerheads means, I do have the answer for you. It is a sea turtle, specifically of the reptile kind. Loggerhead sea turtle is a species of sea turtle distributed throughout the world. It is a marine reptile belonging to the family Cheliodea. Once again, I wish I was hooked on phonics as a child. The average loggerhead measures around 90 centimeters. Piper, we're trying to learn about. This is just talking about marine life. This little shark, dude, just chill. We know it's your nap time. So anyway, yeah, apparently something going on in this situation has a lot to do with sea turtles. They kind of look like this. Redirects here. The loggerhead sea turtle or loggerhead is a species of sea turtle distributed throughout the world. Okay, cool. Sexual maturity within 17 to 33 years, so quite a bit faster than me. They live anywhere from 47 to 67. They're omnivorous. They're invertebrates, which I thought you weren't allowed to be that anymore. I thought, society had progressed past it. I guess this is what they look like. Distribution, apparently they're all over. They're in the U.S. I didn't know that they were on land, but it looks like, dude, they're on all major continents. That's pretty crazy. So, yeah. What are they? Significant nesting site. They're found in the Atlantic Ocean, feed Canada to Brazil. Okay. So, hey, we're all learning a little something today. We're all learning a little something about loggerheads. I didn't know that this type of turtle had anything to do whatsoever with the Iran ceasefire agreement, but that just shows you got to stay informed, folks. You got to stay informed every single day, day in and day out. Oil prices resume gains after Iran accuses U.S. of breaching ceasefire. So obviously, not only did we see the movement over here in the S&P 500, but we saw a little bit of a pop in oil, and oil is going up. So I know we've been talking quite a bit about quote unquote risk on equities. And obviously, a lot of us are trading equities in one way or another, maybe a derivatives market. But what I find crazy is oil is now up and away. We're almost back at 100 per barrel, which is telling me like I'm actually using the price of oil and especially the trend of oil's price to be the best barometer for really how is this thing going. If oil's going up and up and up, that's telling me tensions really are not calming down. So I see that equities are flat, but the fact that oil did bottom out at 92 and we're already back up, something to pay attention to, without a doubt. Trump team explores punishment for NATO countries that didn't support Iran war. So as much as the Iran situation itself is kind of crazy, it is obviously leading to other forms of tensions. And this time around, it's with us and our NATO allies. U.S. troops could be shifted toward alliance members in president's good graces. The Trump administration is considering a plan to move U.S. troops from NATO countries unhelpful to the U.S. during the Iran war. What are your thoughts on it? Do you think that's a smart move or a dumb move? Smart move or dumb move? Thumbs up, thumbs down. If you were the president, would you be this level of petty? Would you be like, you know what? All the NATO countries who didn't help us, we're not going to help you. Would you remove the troops? Or would you actually be like, I don't care. We can handle it ourselves. How would you handle it? If you were magically president tomorrow morning, would you do this? Would you do the same thing? Or would you not? Matt, a loggerhead is a term referring to two stubborn people arguing about something. Search phrase loggerheads. No, it's a turtle. We just, like, literally, I have proof right here. It's about turtles, dude. Like, it's almost embarrassing that you don't understand. Right? That's a loggerhead. Right there. This is, it says it. Loggerhead. Bro, don't try to troll me. I have the internet. I can look it up. That's a loggerhead. It's about turtles. Anyway, yeah, F them, bring the boys home, thumbs up, thumbs up. We have one thumbs down, would do, ha ha ha. So, okay, you guys are pretty much on the same petty level as the president that you do. Be like, you didn't help us. I kind of get it. I kind of get the vibes. I understand. Trump says U.S. ready for next conquest, warns military to remain near Iran until real agreement is honored. So we are at a stage where I don't think the news cycle is going to slow down in the slightest, even if the Iran deal, the ceasefire, the agreement was just completely donezo. You never know what's happening with our fight with NATO. You never know what's going on with China. And you never know what's the next one. We're hearing more and more rhetoric is Cuba. That's one that you got to keep on the back burner. And then all of a sudden, there's one that we used to hear about that all of a sudden we might be hearing about even more. This used to be the hot news. Poorly run piece of ice. Trump targets Greenland again as Iran war deepens NATO rift. So it's somewhat all interconnected, but we used to be talking about Greenland and taking it over for military purposes and security purposes because of the waterway, especially as it relates to Russia and the connection to us. And I get that Greenland has it, but remember, Greenland's really not its own country. It does have sovereignty, but it's kind of owned by Denmark, and Denmark's in NATO, and Denmark wasn't helping us out, and Trump's pissed at NATO anyway. So there's a lot going on. There's a lot of moving parts, but just right here, NATO wasn't there when we needed them, and they won't be there if we need them again. Remember, Greenland, that big, poorly run piece of ice. So it seems like we're not going to get a break from crazy media updates, even if the Iran deal were completely done. So even if the negotiation was struck and everything calmed down, it seems like you got to pay attention to China, Cuba, and Greenland, and NATO as a whole seems to be the next major media cycle. Iran war ceasefire offers investors opportunity to rotate back into risk-on assets. So with all of that in mind, yes, the major thing is what's going on with Iran. We have a data drop as of this morning. There's rising tensions with China, Cuba, Greenland, and NATO. With all of that in mind, my question to you is, do you agree with this statement? Right now, I'm not talking about day trading, scalp trading, or even swing trading. I'm talking about you and your long-term accounts looking at the overall market with the S&P 500 closing out yesterday at 6,782. We went from 7,000 all the way down to 6,300, popping almost 500 points. Do you think this is a good time to, quote unquote, rotate back into risk-on opportunities, assets? And if you don't know what that means, that basically means getting back into the market, not sitting on the sidelines, not being in T-bills, not being in cash, getting into equities, getting into crypto, getting into maybe various commodities. Depends what commodities, I suppose. But like in the most general sense, as of April 9th, 2026, do you view now as a good opportunity to add your favorite blue chip stocks to your long-term investment portfolio? No, a massive gap under SPX. We will wait until adding more. So you're saying you would add more, but you want to see this gap filled first, 6,618? No, no way. Nope. No. Nah, we aren't there yet. Honestly, the fact that so many of you are saying no kind of makes me want to go do it. It really does. We've lived through this before. If you were here in the April-March period, April-May, like this whole crazy March, April to May, no one wanted to buy here, no one wanted to buy here, no one wanted to buy here in 2025, and it was an amazing buying opportunity. Yeah, if you bought a little early, there was a bit of pain, but then definitely no one wanted to do it here, no one wanted to do it here, everyone just thought it was over, and it ended up, regardless, even if you bought it way too early in February, still worked out for you. I wonder if this is a similar situation of, yeah, I mean, of course, anything could happen. Things could spiral out of control and there could be a massive dip. But I wonder, in the event that we actually dip to 6618 and get this downside gap fill, be honest, how many of you at that point, imagine a big red bar today all the way down, how many of you would actually be buying? Are you sure that that intraday sell-off wouldn't cause you to be like, I think the pain could get worse, and then all of a sudden you actually miss the real reversal? Just a thought. Hey, we're working through this together. We call what we actually known as the alligator snapping turtles loggerheads around here. Look them up. They are horrifying. Also not an animal that we've been taught the wrong name for my whole life. Wait, so you're telling me there's an alligator snapping turtle? What the fuck is this beast? This might be more important than today's show. We're learning about, this is apparently what's really oh my God. These fuckers are real. They look prehistoric. They look incredibly, dude, they look like a Pokemon. Look at that thing. Look at that thing. It looks like it's just always shocked. Like, it's just like perpetually shocked. That is crazy. If I'm walking around in like the Everglades and one of these fucker comes up, I'm gone. See ya. I'm sprinting away. Dude, I don't know anything about this, but I bet you there's crazy stories of this thing just ripping off fingers. I bet you the bite force in this thing's mouth is insane. I just looking at it. Just looking at it. Looks like it has crazy bite force. The alligator snapping turtle has an immense bite force, commonly estimated around 1,000 pounds per square inch. Jesus. This video, well, now we got it. Oh my God, it bought it.
He missed the wood.
The alligator snapping turtle has a strong beak that can easily tear through.
Stop. Why are people this stupid? Why are people this dumb? Look at this thing. It's like, well, this one seems abnormally happy. This one seems stoked. But look at the size of that. Where was it? This was Alabama. Jesus. That's crazy. That's seemingly a dinosaur that didn't get the memo all dinosaurs are extinct. Seriously. Like, that very much has the vibe of, like, it just missed that meeting. It's like, oh, we're extinct now? Oh, interesting. It seems like it just completely missed out on the fact that it shouldn't be around anymore. And it's still here. Like, just millions of years later, it's like, wait, where's all the rest of the dinosaurs? That, like, it has that vibe that we should no longer have to be dealing with that. Recent animal fact that I learned, in the history of animals on this planet, in the animal kingdom, the blue whale is the largest animal we've ever known about. How insane is that? That we are living in the period with the largest animal ever. Isn't that kind of nuts? Like, you guys might have woken up today thinking, life sucks. There's a war. I don't have money. I have to pay bills, or whatever's going wrong in your life. I'm sure you were like really focused on that. But did you ever take second to think how lucky we are to be alive in the time period with the largest animal ever known. Makes you wonder, brother. Makes you wonder. A megalodon looked like a Goliath in front of a whale. No, I'm talking. A blue whale is the largest animal ever thought to have existed. How crazy is that? Like, and of course, like one day we might dig up bones that disproves that. I'm not saying that it's impossible, but based on our current knowledge of everything going on, we live in the period with the largest animal ever. How wild is that, dude? So no matter how bad your day is, maybe, just maybe, we should focus on the fact that we get to live in the time with blue whales. I mean, these things, do you guys really appreciate blue whale size versus human? Let's see if we can get a good comparison in here. You can't even really get, like, look at this. Look at how much bigger blue whales are than everything else. Look at this thing. Blue whales. It's a Predator X plus an orca plus a Triceratops. The blue, like, we're allegedly, a human can fit in the heart, the vessels of a blue whale. Look at these things. These, the Bronchiosaurus. Dude, a T-Rex. There's like 10 T-Rexes in a blue whale. Great white. That's not even close. A megalodon. You guys were talking about megalodons. No, megalodons are a fraction of the size of a blue whale. I'm just trying to point it out. Maybe you should have a little bit, like, dude, even a mammoth, these elephants. Do you understand that an elephant is made to look like a dwarf relative to a blue whale? That's crazy. Absolutely crazy. So maybe put a little bit of respect on the blue whale's name and maybe be a little bit more happy that we get to be around these cool things in the modern era. This isn't just like, oh, we found bones and we expect it to be this big. You could go out on a whale watching tour right now and you could clock one of these motherfuckers. They're huge. Absolutely huge. So just wanted to point that out. I don't know what we were saying that got me distracted on that fact, but anyway, are you guys adding to your long-term portfolio or not? Yes or no? Yes or no? Thumbs up, thumbs down is right now. I want to know where the community's at. I'll be honest with you. I already started adding. I added in here. I believe Tuesday was my first day, and then I did a bit more on Thursday, and I'm going to do a bit more in the coming days. So I like to do it piecewise. I don't like really assume I'm going to be lucky and do it all at once. But I did add here. I like that pop. I added a little bit more. I added a little bit more. And I have a couple more bullets in the chamber to add throughout this. But once again, it's my long-term portfolio. So whatever I'm doing now, I plan on being in the next 5, 10, 20, 30 years. So I'm not like by any means saying, oh, it has to go up this week. It has to go up this month. It has to go up this quarter. Of course, I would like for that to happen. Well, because I have more bullets, actually, I would like the next week to maybe get that downside gap fill. But regardless, I want to be very clear that what I added was like my own variant of the Mag 7. So not exactly the Mag 7. I did it a little bit larger and I left out a couple names, added in a couple more. But basically, I added my favorite high quality blue chip stocks, and I've just been roughly doing it in this zone, but I am more than prepared to hold it for 5, 10, 15, 20, 30 years. Do you buy leaps? No, I don't. That is, I have no issue with buying leaps. It's just at a certain point, there's only so much time in the day. There's only so many things you can realistically pay attention to. And I'm a person who per day is day trading options and futures. I'm also swing trading options. I also have a long-term crypto and equity account. So there's just, and then I have to run the show, and then I have to play with my cat. Like there's just, at a certain point, there's just too much to do. Conceptually, I'm not against leaps at all. I would just say that my medium to long-term swing plays, so leaps are good for, I don't know, let's just say generically, and don't hold me to this, but generically 6 months to a year and a half. Okay, so like, that's just a whole nother ball game where if I did it, honestly, I'd be using some sort of AI system, like maybe I'm public and agent to do it for me. I just don't have the time per day to also manage that on top of everything else that I am managing. So just want to, like, I'm not against it, but I have found that the market is the thing that pays you as the trader for expertise rather than just like breadth of knowledge. So Did I add Palantir? I added a little bit of Palantir, but that wasn't the biggest position I added. Was wondering if you were going to mess with Public's upcoming agentic AI. I'm already in it. I got an early access code, so I've already been messing around with it. I kind of wish I had more time to do even more stuff with it, but I could tell you it's incredibly impressive. It really, really is. In fact, I just put in more money to my Public account yesterday so I can build out more agentic trading strategies with Public. So I'm hoping to make more content around that in the future and kind of show it off. But no, it's seriously one of the coolest things that I've ever seen in the world of retail trading. Like, legitimately, it is. All right, bringing it back to today, we pretty much got all the major macroeconomic events already. The only final thing is 1 p.m. Eastern. We're going to get the 30-year bond auction, so please pay attention to that. If you haven't already, sign up for the newsletter. It is 100% free. You've never had to pay for it. You never will have to pay for it. You don't need a coupon code or anything like that. Just go to mattkohrs.locals.com, become a basic member, and you are already in. You don't have to pay for anything. You don't need a coupon code. Sign up for the basic membership, and every single Sunday, you're going to get a breakdown of the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events. Tomorrow, you have the CPI and consumer sentiment in the morning. And then probably the most useful part is the seasonality of each day. Based on the last 27 years worth of information, the better part of 3 decades, this is what your hypothetical equity curve would look like if you bought at open, sold at close on the S&P 500 futures market. For the first 20 years, it was pretty much sideways. About 8 years ago, we got a nice pop. And then about 3 to 5 years ago, we started to give some of that back. So it kind of nets out to being neutral. And then I want to let you know that tomorrow, to conclude the week, for about 25 years, this day was a whole bunch of nothing. A little up, a little down, a little up, a little down, a little up, a little down. But over the past 2 years, they've actually been really big winning days. So I would say it's not full on bullish, but I would say it's a little bit more leaning bullish. So just to give you an idea of seasonality, is seasonality the end all be all? No, but I do like to consider it as headwinds or tailwinds based on whatever the current direction of the market is. Is it supporting momentum of current price action? Are we nicely trending up, up, and up, or down, down, and down? And how does that align with seasonality? So I think it's just another helpful tool to tell you to be a little bit careful, or maybe you should be a little bit more confident. Once again, I give this away for free, mattkohrs.locals.com. My mod just put it into chat. Shout out to Chaos. So sign up. Like I said, there's no risk to you guys for anything. And in fact, another quality reason of why you should sign up is sometimes there's important announcements or giveaways, and then I could use the same email listserv to let everyone know about that. Obviously, I was looking at the Masters. Maybe I'll place some bets. I don't know if I want to place any yeses, but I feel like I could just take a bunch of no's and parlay them together. Shout out to anyone who pays attention to the Masters. I am by no means some sort of golf major fan or anything like that, but I do enjoy watching the Masters. Something about it is really fun. So shout out to all my golf enthusiasts. If I were to bet this, for anyone in here who like legitimately pays attention to golf, who do you think are the top 3 people that have a real opportunity? Do you think these odds are right? Scheffler, Rahm, and DeChambeau? Do you think those 3 are actually the people who have the 3 best opportunity to win? Or do you think that the market is kind of like off on this one? Xander, Bryson, and Rahm. So you're saying no to Scheffler, and you're saying Xander is actually underpriced. Interesting. 3 best for sure. I know they're the best, but like sometimes like there's a little bit of maybe something going on in their social life. Like Rory winning it last year, that was such a cool event. Like, is he going to come in hot? Like, I know that the odds are going to dramatically change, but my question is it that crazy of me to go out of the top 5 and then just take the no on all of them? Like, literally out of the top 5 and just like start at Ludwig and just go, no, no, no. I know it's a small gain, but it's such a high odds gain. Like, is that a bad idea? Of just to take all the no's as long as I can get like a % gain on it. Like the chance of Siwoo Kim winning, no. Brooks, no. Jordan Spieth, probably not. Min Woo Lee, no. And Justin Rose almost won it last year. His final round was incredible. Patrick Reed, Robert, like I feel like I could just stack up a bunch of no's and just hope that none of them go lights out. I don't know. Maybe we'll talk about that a little bit later when after the market opens. Hopefully we lock in some money, but I guess I should do my job and return to what is happening in the market today. So very quickly from the overall perspective, the all-time high is 7,000. We recently dipped, almost got into the correction territory of a drop of 10%, almost got there. We dipped at 6,315. Since then, we started a rally up. Then we got the announcement that the ceasefire is on, and we got a big pop. We concluded the day at 6,782, a nice 2.5% gain. That's kind of like, that's a noteworthy gain. Is it the biggest ever? No, but it's definitely an outlier in terms of the normal distribution of the market. Now, since then, because the ceasefire is called a little bit into question, we've given a little bit of that back. If we were to open right now, let me zoom in on this, we would be at 6,765. So we are giving that back to the tune of about 15 points. We're kind of like right where my cursor is. So we are on top of the transition zone. As you can see, we have some very interesting bets. This right here, this, let me move myself over so you can see it a little bit better. This positive gamma node and this negative gamma node, this is actually a call credit spread. So whoever this player is, they actually want the market below 6,740. So right now, this player is not looking so hot, and they are very much betting on that dip. So something interesting to pay attention to, 6,780, 6,800, and then we have another call credit spread up here at 6,820. So those are the big positions of the day. Big money at 6,740, 6,780, 6,800, and 6,820. You might want to write those down. You might want to pay attention to them. In fact, if you want, you could just screenshot this. I did mark out all the key levels. I marked out the transition zone. The transition zone is the white box. All the key levels where there's big money positioned at it, those are the yellow horizontal lines. And then the green, the red, and the white. Honestly, do we even need this one right now? It's too close. So there is one at 6,740, but that's pretty much the closing value. So we already have something marked there. The green, the red, and the white are the previous trading session, aka yesterday's high, low, and close. So like I said, feel free to write these down. If you want to use them, use them. If you don't, I don't really care. These are just all the key levels I'm using of the day. And how did I come up with them? Well, they're either a combination of key technical levels, psychological levels, or gamma levels, aka they're just major levels people should be paying attention to because large players are watching them. I do want to point out that stability in a vacuum is low. It's 26%, but it's still higher than it used to be over the past 3 weeks. We were lucky to have a stability of 5%. So obviously, we're seeing a nice upward trajectory. Now, I also want to point out, we have a lot of positive gamma beneath us and negative gamma above. Generically, this means if we were to dip, the market makers will be buying. And if we were to sell, or excuse me, if we were to rip, well, actually, the market makers might be supporting that unless we get up into the realm of 6,900 later today, which is very much a far shot. But I actually just want to let you know, this is a pretty constructive setup for the bulls. We have positive gamma beneath, negative gamma above. This dynamic is by no means a guarantee, but it is more likely that if we were to dip, the market makers would have to buy to balance out their books. And if we start to rip, they actually might buy more to balance out their books. So once again, this is a positive development for the bull camp. Of course, the situation is dynamic and it can change at any moment, but as of market open, I like what we are seeing here. This does favor the bulls. And then when I pair that together with 5-minute, 10-minute, 30-minute, 4-hour being all bullish with respect to momentum, 5-minute, 10-minute, 30-minute, 4-hour being all bullish, the bulls are in control. Once again, I cannot stress this enough. The situation is dynamic. We could get a random update at any moment in time, but based on all the empirical evidence we have right now, as of market open, I would say my personal bias is leaning bullish. Is it an A+ 5 out of 5 setup? No, but it is more of a 4 out of 5 B+ setup. I do like what I'm seeing, and it's still pretty strong. So I just wanted to share that with all of you. Obviously, throughout the day, we will be monitoring the options flow. And speaking of which, today is the day. Spot Gamma, which is the tool that I use here, it's also the tool where we see the option flow throughout the day. They are doing a specialty free webinar today at 1 p.m. If you are free at 1 p.m., I promise you, you are going to want to see the breakdown of the new product they are unveiling. It is free for everyone. You're going to get an explanation from the people who made it. And more importantly, it is free. It is at 1 p.m. today. Pinned to the top of chat. in the description of the video. I promise you, you are not going to want to miss this. And it's literally no risk to you. It's free. You just need a name and an email and you can save your spot. It is free for everyone. They are unveiling new tools. I got a little bit of a sneak peek and it is fucking awesome. So shout out to Spot Gamma. I highly recommend everyone listening to me right now take advantage of it. It is free, 1 p.m. today. I also want to remind you, today is the last day of Apex's 90% off deal. And based on the craziness that we're already seeing in the market, I have a feeling it's going to be quite easy to get the ranges you need to be able to pass these evals. So if you want to take advantage of the 90% off, use that code Goonie, Goonie, 90% off. My personal favorite accounts are the end of day drawdown, 150K. That's a personal opinion. Obviously, you should be using the accounts that whatever are increasing the likelihood of your success. So just want to call that out. I always get asked what's my favorite, but most importantly, the deal ends today. This is the last session, 90% off on Apex with code Goonie. And then obviously the Spot Gamma free webinar is at 1 p.m. today, pinned to the top of chat in the description of the video. And with that being said, let's get ready. Let's get ready. We're watching oil. Obviously, that's been a pretty good indicator of the craziness. We're watching the SPY and the Qs. And then people were saying, look at CoreWeave. CoreWeave announced a deal with Meta, and that's why they gained 4% yesterday and another 2% this morning. So CoreWeave is looking good. Apple is really popping in pre-market there. Nvidia, Tesla got hit. Hopefully that can bounce back. What is the equity that's really moving that you guys want up in the bottom right? Shout it out. What right here, what do you want in this particular panel? Let me know. Someone comment it as quickly as you can. What's the big mover in pre-market? Big mover in pre-market. The fact that the cat's on my lap and I'm not taking my allergy pill today is going to make it interesting. Should it be vol? Should we watch a vol out of the gate? Bitcoin? You guys want Bitcoin up? I'm cool with that. I'm cool with whatever. It's your show. It's not my show. I also do want to let you know where I'm at. I just like to be as transparent as I can. So here's what I'm currently trading. I'm trading take profit evals, which are halfway there. I'm trading funded legends and I'm trading funded Tradeify. Those are my accounts. I'm trading 15 accounts today. 10 are funded, 5 are evals. I'm currently frozen out of Lucid as I await to go live. I'm currently frozen out of FFN as I'm waiting for my payout approval. I did request another $10,000 payout yesterday, and I'm frozen out of Apex as I'm waiting my $1 million payout. So frozen out of Apex, waiting for the $1 million. Frozen out of FFN, waiting for a 10K payout. Frozen out of Lucid, waiting to go live. So frozen out of 3 different firms at this moment in time, all for, I would say, actually arguably good reasons. And then what I'm actively trading, not frozen out of, is 5 evals on Take Profit, 5 funded accounts on Legends, and 5 funded accounts on Tradeify. So that's where I'm at. That's the skinny on the situation. I did execute one trade earlier today. Oh, did you guys see that I made this? I improved my own trader panel and I added a clock. Do you guys like that? Thumbs up, thumbs down. Are you guys impressed? Not impressed? I thought it was cool work. I made my little AI slave Claude do it for me. But I thought it would be nice to get exact timestamps instead of like kind of squinting your eyes and saying, oh, wait, what time was it? When did it go through? I thought having a clock there and the date would be a little bit helpful. The other thing I added, and I thought this was fucking sick. Oh, wait, it's not here. Hang on. Indicators. I built out a new indicator. Oh, wait, it is there. That's called Show Trades. Boom. So it just connects all my entries to my exits. If it's a profitable trade, it gives me a green line. If it's a losing trade, it gives me a red line. And then obviously it adds a little bit of text of the USD currency gain or loss, and then also the points for the underlying that I'm trading. So once again, I had my little AI slave Claude whip that up yesterday. I thought for the stream, this visual would just be a little bit more helpful of seeing the exact entry, the exact exit. Of course, I always had those markers, but once again, the markers are kind of small. I felt like they were difficult to see. So I did whip this up. So the green dash lines, obviously the entry to the exit, and then the profit and or loss on the trade. So built that out yesterday as well. And when I say I built it out, once again, I mean my little Claude slave did it. So if you guys have any constructive criticism of like, yo, the chart panel could look better if you did this, or you should do this with your trades, anything that you think would make the trading easier or the visuals on the stream easier or better to see, let me know. You should publish your indicator. I reached out to NinjaTrader, and I'm in the process of doing it. To be able to publish it, you have to become a vendor, is what they call it. So I did reach out to my contract at NinjaTrader, and they are attempting to do what they can to help me to fast track the process. Apparently, it's not the quickest thing, and it takes a little bit of like back and forth checking this, that, the other thing. So I am attempting to do that, because that type of stuff, like if it can help me out, I assume it can help you guys out, and I kind of just want to give it away because, hey, if I'm going to be burning my own Claude credits, there's no sense in you guys burning your Claude credits as well. So that type of stuff, yes, the plan is, especially for everyone in the Discord, especially for everyone in the Goonie trading community, I have nothing but the full intentions to just give it away to you. I'm just trying to figure out the best way to actually do it. And at first you might be like, but Matt, just give us the code. The issue there is if there's a bug or something like that, I need to be able to update it in a way that the update then persists to all of the people using it. And so it's not as easy as like, oh, just the copy and paste of the code, because if it's broken or if there's improvements, there's other stuff going on from a coding perspective, where I need a mechanism that with any update, you guys can get the new version. So I'm working on it, but those were the recent updates I did. Once again, I changed the shader panel and I added a clock here. And then also I have a new indicator called Show Trades that it just connects the entries to the exits, winners, losers, a nice dash line. I figured it just improves like the aesthetics of it, if you will. So that's where we're at. Obviously, I have an entire log of things that I want to add to make it even better. But that's just kind of the stuff that I did yesterday instead of actually doing the work that I really, really needed to do. I like to do this thing where I go in and I start talking to Claude, and I think there's going to be like a 2-minute quick fix, and then I like pass 2 to 3 hours. This literally happened to me yesterday, and I forget about all the work I really had to do, and I just get sucked into the vortex of arguing with AI, trying to improve code, and then I get frustrated. It keeps fucking up. Then it yells at me. I yell at it. We both cry. Then we have to talk to a therapist. It becomes like a whole thing really, really quickly. Very, very quickly. But dude, it's a black hole of time. It really, and like, I guess it's a better use of a black hole of time than something like social media. But like, I get sucked in, and I get sucked in bad. I'm like, okay, I'm going to do like one little update. I'm just going to add a clock. And then before you know it, I'm like changing this, that, the other thing. And it just it gets nuts. It gets quite nuts. Anyway, as you can see, that one trade that I showed you, that was this trade right here. So all of my evals, my 5 evals, and my 10 funded accounts made about 20 points on all of them, up $400. I just wanted to get in for a little scalp. You know, I was feeling it this morning, felt like it was pretty good. So I took that. And now I am just waiting. The max I can make on the take profits is 4.5K. That is their 50% rule. On Legends, I can make up to 3 or 3.5 for their 35% consistency. I am targeting 10K in profit before I do a payout. And then interestingly enough, on Tradeify, there is no consistency rule. So actually on the FTDs, which are now funded, I have not had funded Tradeify accounts in a minute. On these ones, there's no consistency. So technically it's uncapped. So the bottom 5, if I catch a runner, I actually can just let it run and run and run. Do you like Claude better than ChatGPT? Depends what you're trying to do. I use the 3 AI systems I use are ChatGPT, Claude, and Grok, but then I use them all for different things. So I can't just generically say one is better or worse. Just because it depends the task that I'm trying to accomplish. I don't really use any others. I am hearing rumblings that Gemini is getting better and better, but just to be completely honest, I haven't used it at all. So quick bounce off of VWAP right there. Did any of you play that VWAP bounce right there, buying at 24? Out of my own morbid curiosity, and by that I mean my own jealous curiosity. How many of you bought this? If you bought at 24, you literally only had 5 points of heat. Your stop's already at break even, and if you catch, oh man, I know someone in chat did it, and I'm already fucking jealous. I'm already like, dude, That like what? You bought at 24, 5 points of risk at max, so you barely had to sweat. Your stop's already at break even. Dude, jealous. I'm jealous. I'm green with envy. Bought right at VWAP. I did. Okay, so all of you got the memo. You fucking loggerheads. A bunch of goddamn loggerheads in here today. Bunch of loggerheads in here, dare I say it. Excuse me for my French. It's just how I feel. Hey, Matt, did you get a payout from Legends? I did not. I have not gotten a payout from Legends or Tradeify at all ever in my career of prop trading. It's been a minute since I got a payout from Take Profit. My most payouts are from Apex. I have quite a bit from Lucid, but I can't do anything with Lucid right now because I'm in the process of them creating like real live trading accounts for me. I've never gotten a payout from Tradeify. I've never gotten a payout from Legends. Legends I'm new to. I just started with Legends in March, so I'm new with them. Tradeify, I started with them a while ago and then didn't use them for the longest time. So really, I only started seriously with them in February. So like that's not as bad as it sounds. Take Profit's legitimately bad. I don't know, something about my psychology and like those specific accounts, like these specific Take Profit accounts, I just can't do what I need to do. I don't know why. Like my brain like short circuits anytime I'm trading Take Profit Pro accounts. Wow, it's 2 months on Apex. Yeah, I was frozen out on February 3rd. But from everything I'm reading, it just right now the legacy accounts are taking quite a bit of time. Do I want to play this breakout? So between reviewing all of my trades, remember, I traded for 73 trading days. Most of days, like I had a lot of trades, like maybe I average, I don't know, 3 to 5 trades a day. So there's a lot of trades to review, KYC, AML. They had all the drama to handle with Brian Stonk and other influencers cheating the system. They rolled out a new website. They rolled out new accounts. I know on surface level, it seems as like, oh, wow, that's a long time. But running a business, like from the business side of it, like when you start to realize, I feel like I just requested at like the most unfortunate time ever. Like I think I requested right before they became incredibly busy. So it just takes time. Like in trading, patience is key. And hey, I can have the patience to wait. Oh, I almost went long there. All right, we definitely don't need to listen to this guy. But what we do need to look at is the options flow. I don't have any position on right now. I'm trying to vibe it out. I'd prefer to take a long, but hey, if things are starting to go sideways, I'm more than happy to take a short. I don't mean sideways as in actually price action sideways. I mean sideways as in not so good, upside down, like the situation went sideways, that type of the thing. SPY going sideways in terms of flow, and then Mag 7 did dip, getting a little bit of a pop. NASDAQ is actually dipping. Here we are, the SPY trying to grind up. We have a lower high on the Qs, but also it could quickly just become consolidation if we put in a higher low. Oil's going flat. 5 minute is bullish, 10 minute is bullish, 30 minute is bullish, 4 hour is bullish. Looking at the NASDAQ, 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, 4 hours bullish. So momentum is bullish. Options flow could definitely improve. I don't like the flow on NASDAQ. I want to see if that can turn around. I'm wondering if we bounce from one VWAP to the next VWAP. That's not the worst trade ever. I'm taking it.
Order filled. Order submitted.
Putting in my risk right away. I'm taking the VWAP recapture. So we opened, we've puked all the way down to 1 in VWAP. We bounced right up to the next VWAP, which happened to be the 50% retracement. We got a little bit of a double bottom, a little bit of a fake out sweep because the low was 44, sweep down to 43, knocked people out, and away we go. The old loggerhead setup. If this ain't the most evident loggerhead setup that I've ever seen, the old little razzle dazzle, the old little fake dump, the pump, the sweep, this is where the loggerheads get caught, and then bada bing, bada boom, to the ocean we go. It's very, very evident, this setup. The old loggerhead sweep. If you've seen it once, you've seen it a million times. The old loggerhead. Classic play on a beautiful Thursday. A classic play on a beautiful Thursday. INTC won't stop. INTC won't stop, I'm being told. We don't need any of these. That's crazy. Why are those up there? INTC not that long ago at 41, now at 60, and it is a runaway trade. Would I buy right here? No, you are incredibly late to the party. The buy point was this breakout at 49, and even then the risk was rather large. Obviously it paid out, but I wouldn't chase it at this point. If you're in it, yeah, things are looking pretty bullish, and ride it as long as you possibly can. But I would not be chasing it at this moment. But yeah, it looks legitimately strong. We haven't gone through equities in a while, so let's take a little looky-see. NVIDIA trying to recapture the cloud, so maybe it's going bullish. It is back above its 200 simple moving average. Tesla not looking good, actually really getting beaten up. Apple, maybe double bottom low, trying to recapture the flag. Google, same thing, looking actually pretty decent. We don't need those anymore. But Google's going pretty much with the overall market. Palantir taking a hit. It is below. It actually got double rejected at the 200, heading the wrong direction. Meta, decent pop there. Meta going from 520 up to 630, trying to recapture the cloud. Look for not only the double top at 680, but also that 200 simple. TSM looking very strong, actually, relative to the other tech plays we're looking at. TSM crushing. Avago, also a nice recovery right there above the cloud, a nice little technical breakout. RUM trending down, unfortunately. Oracle trending down, unfortunately. Microsoft trending down, unfortunately. Microsoft, what a fall from grace for Microsoft. What a fall, 560 down to 360. ASML looking really good. Okay, so the thing that I'm seeing is the upstream producers for these GPUs, TSM, ASML, are looking good. And then right behind it, Avago and NVIDIA. So actually, it seems like semiconductors are performing well right now. AMD right there. So where I'm seeing strength, as the market is potentially recovering, where we're seeing strength is clearly, without a doubt, these semiconductors. Amazon, nice recovery there. Bezos, it's right at the 200. Netflix, decent recovery ever since it stopped trying to buy out Warner Brothers. Coinbase getting beaten up. MicroStrategy getting beaten up. Dude, MicroStrategy, what a massive fall from grace. Hut is looking good. This is a crypto mining company looking pretty good. DJT getting its teeth kicked in. Texas Roadhouse, this is illegal. This is manipulation without a doubt. TLT, bonds, not looking the best. Gold, nice bounce in gold right off that 200 simple. And on silver, a pretty solid bounce as well. Silver hasn't really gone bullish quite yet. It was flirting with it yesterday, so it might be today. Same thing with gold. It is attempting to switch momentum from bullish to bearish back to bullish after that beautiful bounce. My trade's working out. Got rejected at 100. All right, we're moving it to a free trade. That's simple, folks. We're going fishing. That's what you want to do. When you see the loggerhead setup, especially on a Thursday, whenever you get a multiple ATR move in your favor, you are very much going to want to get that stop to break even. Folks, we've seen the loggerhead pattern way too many times before, especially when you mix it up with the alligator snapping turtle liquidity sweep. When you have a loggerhead setup with an alligator snapping turtle liquidity sweep, that can only mean one thing, folks. If I've said it once, I've said it a million times. If you misplayed this pattern, the loggerhead alligator snapping turtle sweep, you're just not studying enough. You're just not studying enough, honestly. Anyway, it's a free trade. It's a free trade. Maybe I get the breakout. Maybe I don't. I don't know. I don't know. I don't know shit about fuck. That was by far the best line of Ozarks. Chat, am I right on that statement? The best written line in the show Ozarks? Crap, it almost knocked me out. Is it going to knock me out? It almost knocked me out. The best written line in the show Ozarks was the curly-haired blonde lady when she's like, I don't know shit about fuck. That should be your trading mantra. If you are not saying that to yourself every other minute of an intraday trading session, I question what you're doing. It's so symbolic of everything going on. Crap. I might need to move up to that just to capture a little bit, just in case. Do I want to close it and just take a little bit of green? I'm giving this a chance to be a higher low. I'm giving it a little bit of a leash here, but it's not feeling the best. I think something just got hit. NASDAQ got hit. Mag 7 didn't. S&P 500 pumped, giving it. The vibes are low on this. I'm giving it one little opportunity. You know what's going to happen? Is it's going to wick me out. It's coming for the 50% IB. Come on, get away.
Order filled.
Yeah, it happens. All right, I didn't risk anything. It was a freebie trade. I got in and out. The old loggerhead. I had to get out just because this could fail. We are at a point of equilibrium. If it starts to bounce, guess what? I'll throw on another long. But just in case I'm on the wrong side of the quarter flip, well, okay. Then I sidestepped whatever the sell-off is. But you could see I got in right here at 1041. It popped. It overshot it. That's not the best sign of fake out breakout. We did come to equilibrium. If I see strength here, I can re-enter. It was unfortunate that someone is hitting the options market. I'm watching this closely. Right there, you can see break-even trade. Oh, break-even trade. That's a bit of a bummer.
Order filled. Order submitted. Order submitted.
All right, we're just throwing on a little bit of protection. Throwing on a little bit of protection, brother. We're looking at the blue dash line, or you guys like these colors better if I do remember. Shit, we're right there. What is this low? That's 56. Do I want to use 56? Is this going to break down? If it can just get back above 87, or do I just want to close it now? Is this a brutal fake out? We're at a point of equilibrium. Remember, as we were saying about Ozarks, you have to admit to yourself when you don't know shit about fuck. And all I can tell you is we're at a key point. And the game here is, okay, let's see if we can identify the trend as we leave the point. It might be up, great, ride that trend. It might be down, great, ride that trend. You just want to identify the key points of equilibrium and see if you can ride the trend from there.
Order filled.
Yeah, and I'm just not going to give it that much room. I was long too, and I cut one because, once again, I just am attempting to control my overall risk because I fully understand we might just be dipping to this VWAP. We might be going from this point of equilibrium to this point of equilibrium. 100% possible.
Order canceled.
We're getting rid of that. This is at 31. The question is, do I want to try to buy here? 30, 24. I see some sellers. Do I want to buy another one right here? I got to zoom in. I want to know if I should improve my average. Why is that not there? All right, let's see if we could get a little lucky.
Submitted.
Let's see what we can do. Let's see what we can do. Nope. Is it going to go without me? Fuck. Did I miss it? I might have missed it.
Order filled.
Right where I got knocked out. VWAP is currently 31. I am willing. Oh, wait. Did I accidentally close out? Fuck. That was stupid. Well, maybe that was a good sign. I didn't mean to close out there. I hit the wrong button. I was going to average down. I should have bought at 31. Okay, we are back at VWAP. Are we going to hold VWAP is the real question. Options flow is getting beaten up. Maybe I do it one at a time. Play this a little bit more safely. I was willing to buy at 25. The IB low is 19. It's 9:53. We could get the old 10 a.m. reversal. I think I just need to do it. Do I need to be greedy for 25 to try to get the fill under? Watching. I currently have no position. Are people going to be targeting 200? I don't see many buyers at 200. Okay, if I'm wrong on this. What would my risk be? What would my reasonable risk point be? Right above VWAP. I'm trying to be patient with this entry. Trying to be patient, not trying to force it. I did somehow mess up these trades, but in all reality, the mess up I think actually saved me a bit of money, so I can't be too upset about that. I think the mess up is actually going to benefit me.
Order submitted.
All right, I'll have a pending order here at 200 in case there's a weird flush that happens quickly. I'm willing to take a long because momentum is still favoring the bulls. Obviously, if it stops favoring the bulls, clearly I'll just get out of the position. But as long as it's favoring the bulls, this is the side that I want to be on. This is the side that I want to be on. Watching closely, not trying to be chasey with anything, not trying to get too crazy. Join just to dislike. I appreciate that. Thank you. That's very, very kind of you. If I didn't have all my hate views, where would I be at in this world, you know? Where would I be at in this world? All right. Let's see how much smoke I actually have to take. Let's see. It might actually be puking to 50. Oh, nope. We still have these lower highs. We're not really cracking trend quite yet. Is this going to be a classic 10 a.m. reversal day? It's 9:56. We've seen a lot of 10 a.m. reversals. Momentum still bullish. The short term's getting hit, though. Are dip buyers going to come in right at the change of the hour? Or is the SPX, does it really want to vomit this additional 21 points and tag 6750? I'm trying to do a cheeky little play here at 25,000 flat just because I identify it to be so incredibly important that even if we're still going down, I still imagine there to be a 20 to 30 point bounce that at least I could slap in the stop for break even in case it is truly the bounce. So I'm willing to buy at this key level just because I guess in my years of watching the market, the chance of a smooth, clear break on the very first test, apparently happened at 5 points early. Jesus. Well, there's a breakout of sorts. Right back to VWAP. Is this going to be a VWAP rejection, though? A little trend line breakout, a little VWAP retest. We could have a shoulder head shoulder, and it could rip, or this could be a fail here. Damn, I was 5 points off. Right back to equilibrium, team. This might go down to 24,600. Yeah, those comments are kind of nonsensical because anything could happen. This might go down. Yeah, it also might go up. It also might not. Like, it's just this idea of it might happen. No shit, dude. People say that as like, oh, it might do this. It might do. Yes, anything is possible. I mean, as long as you're not like outside of the bounds of literally the percent movement that freezes the market, like those statements of it might do this, it might do that. Yeah, it might hit the downside gap fill, or it might rip 500 points. Like, it's all possible. So like, I just, when people say that, I wonder like what's really going on in their brain influencing their trades when at any given point, anything could happen. Hey, Matt, oil's pumping, so NQ longs might be a bit risky. What if oil starts to fall? Folks, it's all risk and reward. Remember, you make or lose money based on what happens from the moment you get into the trade, not what was happening before the trade. At any moment, oil could fall. At any moment, NQ could fall. You have to keep your mind open to the concept of you do not know the next bar. The next bar has a 50-50 shot, and I will drill that into your head that you do not know what the next bar is going to be. So just commenting on like, oh, this is where it was. Yeah, like you could measure momentum, and maybe that gives you a little bit of confidence, a little bit of self-doubt, something like that, and that's completely fine. But at the end of the day, none of us know the next bar, like at all. So this idea of like just because of what is happening and you're predicting that to continue forward, I mean, it's in a certain sense going to be very, very dependent on your time frame as well. So we're right back here. 25. I would have taken 20 points of heat. We're right at VWAP. So here's the golden question is, which way are we going to break from VWAP? I have no particular bias. I just want to play the break from VWAP. It seems more likely to break to the upside because that's where the other VWAP is. This is a higher low. That's not bad risk either. But all I can tell you is we're at a point of equilibrium. And if you were to have a super strong bias of it has to bounce from here, it has to break down from here, I just fundamentally disagree with how you view the market. I think the safest thing you could do is identify all of the key points. And then when price gets there, say, oh, that's interesting. We're at a key point. Let's see which way it goes from here. Do I want to, if it gets to 25,000, do I actually want to have this long? It's 10 a.m. now. Are we going to get this reversal? Is it going to be another classic loggerhead 10 a.m. reversal type of a day? Maybe. Something to consider. Obviously, it's not a guarantee, but if it does reverse, I do want to get involved in that particular trade. If, which is a big if. It's a big, big if. A big, big if. I try to play this VWAP bounce here. That's these trades on the chart. I got knocked out for break even. It started to bounce. I try to play. I got out on the breakdown. Weird little trade here. That was an accident, but honestly, that accident was a fine exit. It stopped things from bleeding. I would have been down worse right now, so I don't mind it, but it was a little bit of a fat finger mistake. Apparently, ginormous gaps fills don't get filled. They do eventually, but remember, gaps created by like legitimate impactful news do have less of a fill rate than just kind of random market trading gaps. Like that is a true statement. So you're talking about this ginormous gap. Well, in reality, what is the ginormous gap? Well, it's gigantic news about this potential ceasefire. Fuck. This is a tricky situation because this is a higher low. And if I buy, do I have to risk the sweep of 25,000? Not the nicest setup I've ever seen. Because what we just put in is a potential higher low right here, 1001 compared to 956. But if we're still trending down because we have lower highs, can you really get out of the long? Like, it might just bounce at 25,000. So, like, even though that's a legitimate setup to go in on, I think it's a little bit too much risk for me. A little bit too much risk for me. There's no trends today, says you. Trend is dependent on the time frame you're looking at. You might think that there's no trend, but that's not just generically universally true. For you and your time frame and your style, you might think there's no trend, but to say that as just like an all encompassing statement, well, by definition, that is just wrong. The volume seems low so far. And what's that? So are you considering low volume to be bullish or bearish, or are you just stating like a thing? That, like, I guess low volume, you could fairly interpret that to mean low confidence in the current move. Like, I would say that's a fair interpretation. But beyond that, that's all you can say. Could be shoulder, head, shoulder. We might be setting up for the VWAP recapture. It'd be confirmed if you can get above and sit above 60.
Order canceled.
Do I like this? Do I think this breakout's actually going to hold? Do I like the vibes? The SPY is picking up. The Mag 7 stopped puking, but the Nasdaq was the real culprit. And it seems like maybe, I don't know, it's making decisions. It's making decisions. Is this the actual bomb? The SPY is doing quite a bit better than the Nasdaq. The Nasdaq is weaker today. Oil is popping. You guys are right to point that out.
Order filled.
All right, we're not taking on much risk
Order
on this
submitted.
one. Of course, it is. Is it a fake out? Is it going to hold? Fuck.
Order submitted. Order canceled.
This is a tough play. I'm not the most comfortable with this play. All right. I'm gonna... do I want to do this? Okay, so you have regular trading hours VWAP at 54. We just hit that. There was a reaction. This is a point that, like, I'm betting that the breakout does happen, which might fuck me over. I'm playing a dangerous game right now because it could easily get rejected anywhere from 54 to 60. This is RTH VWAP. This is 50% IB. Oh, this is a dangerous game right now, which maybe I shouldn't be playing said dangerous game when I'm down on the day. And it's 50. Yeah. Like, I mean, look at it. We perfect. Like, it wicked right into it, got smacked. So we're playing that game, the ping ponging from one VWAP to the next. Fuck. I mean, I can't kick myself that much. I was going to dump either at 59 or 60 or 61 and it never hit. So my little profit target would have never hit, but I need to better. Okay, what's a smarter way to manage this? Or do I just want to cut bait? I mean, it could just bounce right here. What is this recent low? My fear is that it still just wants to hit 25,000 flat and then pop from there, but that would put me down 80 points because I have 2 contracts. And I don't think I want to carry that on the day. I think that'll put me too much into the hole to be comfortable. So do I just want to cut bait now and then go from there? I don't know how it's going to react to this. For a second, I thought we had a real shot, but it was a fake out breakout, which by definition is bearish. So by definition, that's going against me. 900. I don't want to give that. Unless, do I just want to cut one, cut it in half? But is there really even a point? Like, if I'm willing to cut one, should I just cut both? I'm trying to play this VWAP recovery. If we do recover, if this pushes up to 50 here, I could easily use 21 as legitimate. But here, look at it. Just, we got rejected at that VWAP, back to this one. Now we're struggling at this one. We're just bouncing in between these points of equilibrium. Yeah, I'm going to get
Order
cut.
filled.
Yeah, that was probably the right move just because I really didn't want to carry on that much. And knowing my luck, that will be the bottom. But just in case, because like I said, there's clearly a non-zero chance this could go to 25,000 flat. So I think I made the move. Unfortunately, knowing my luck, if I held it a little bit more and gave it a little bit more leeway, it would be fine. Look at that. Literally bottom ticked out. But there's just, if this happens to you 9 out of 10 times, that's frustrating. But the 10th time, it keeps going and you lose all your accounts. So even though it sucks, it's just how this goes. It's just, this is sometimes the name of the game. Like literally fucking bottom ticked out right there. But it happens. Like I said, if it happens 9 out of 10 times, yes, it is frustrating 9 out of 10 times, but you have to respect your risk because it's on the 10th time that it's a legitimate breakdown, a legitimate trend reversal, and you would lose your accounts anyway, and then like the game's over. So for all those other 9 times that you somehow made money, that 10th time, you're giving it all back anyway. So I get it. We all get into those moods. Well, now this might be a legitimate VWAP. Rejection. We fought. We got an attempted expansion up to this side, got rejected. Damn. I think it's going to 25,000 flat. Let's see how big the bounce off of this is. 25,000 flat. And that's why you get out, just because, for all I know, we could tag 25,000 and rip from there. But there is that chance that it like legitimately sells off. And instead of taking a hit that is recoverable, you just lose your accounts. Like, you don't want to play that game. You don't want to play that game. I still think this play is quote unquote easier on the reversal just because I'm looking at the 5, 10, and 30-minute momentum. It still favors the bulls. So if you're trading with overall momentum, you want the bounce. But at a certain point, price action is price action. What time is it? 10:11. There is a 30-year bond auction at 1 p.m. today. I don't see that many people lining up at 25,000, oddly enough. You would think that there would be a huge buy order there just because it's like the most major psychological level. But that is apparently not true. Apparently not true. What do we want to check out here? All right. I'm just going to generically... We have a couple more bullets in the chamber here. Remember, you want to play in a way that you can survive the variance. I'm a 50-50 trader. No one is surprised to hear that. It's just how it goes. We still didn't really, we hit 01. We hit 01. Just wait. Calm. Back to VWAP. Right off of that 25,001. So some buyers did step in and now to a point of equilibrium. Will it get rejected and vomit back down? Will we break out and go to the next one? Your guess is as good as mine. The question is, do I want to get in before it? So if we do break out, I can use that as a reasonable stop. What time is it? 10:12. This is a good reversal time. All right. See, if I was willing to take on more risk, I would have been fine, unfortunately, but you can't bet on it magically turning on your favor in your favor. That gets dangerous, and it gets dangerous real quick. What's this recent high? This recent high is 48. 48. That's the 1 minute high. That's this VWAP. We did make fresh lows. S&P 500 kind of choppy. NASDAQ is going down. Mag 7 is catching a bid. Is this the sign? Are we starting to reverse here? What did someone do? Put selling, call buying across the Mag 7. Oddly enough, though, the NASDAQ is looking horrible. So Mag 7 is looking great. NASDAQ is looking horrible. And S&P 500 is looking choppy. So no clear direction in options flow. 5 minute is bullish, 10 minutes bullish, 30 minutes bullish, 4 hours bullish. Looking on the NASDAQ, 5 minute was bullish, trying to recover. Would love to see that push of 48. 10 minutes, same thing. 30 minutes, same thing. On the NASDAQ, it's all trying to hold bullish while the S&P 500 is clearly bullish. Is it going for, wow, look at that. We're just literally ping-ponging in between VWAP. I feel like we see this about 2 out of every 5 trading days, 2 days out of every week, where we see that classic trade of if you just buy at one VWAP and sell at the other, buy at one, sell at the other, it ends up being a phenomenal strategy. Obviously, I don't think that's like a base strategy that you should be trading every single day, but thus far, it's worked pretty well. And right now, it was messy today, but it definitely would have worked. You could have just one VWAP to the next VWAP to the next VWAP to the next VWAP to the next VWAP. We're just literally pancaked in between the two VWAPs, the session VWAP and the regular trading hours VWAP. So no real expansion yet from that moment. I guess you could argue that it started at 9:51. That's when we first started tagging it. We might be expanding downward, but even that's a tough play because the S&P 500 is still showing strength. So whether you're bullish or bearishly biased, this is a market where you can see what you want to see. You really, really can, because if you're bullish, you're going to be focusing on the S&P 500 and be like, look it, this is all still looking good. And then if you're bearish, you're going to be focusing on the NASDAQ and say, look, this is starting to break down. So it's really, really in this market, this current intraday session, based on all the current information, easy to find whatever you need to support your own bias. So please be careful, because the opposite of that is also true. Like it very much is. If you are bullish right now, you need to consider what's happening in the NASDAQ. If you are bearish right now, you need to consider what's happening in the S&P 500. It's just the opposite signals are showing in a highly correlated index. So just be careful with all of this. Just be careful. 5 minute is testing. 10 minute is testing. On the NASDAQ, though, this 30 minute, it's getting choppy, folks. This is why I was bullish, because up until now, everything was still showing bullish across the board. So I was like, okay, let's take reasonable shots. They just variance hit, and it just didn't work for me. Matt, Spot Gamma versus Bookmap. Isn't Bookmap better since it's live orders and fills? You seem to like Spot Gamma more. There's no comparison. They're two separate things. Spot Gamma is options analytics. Bookmap is the specialized visual DOM for futures trading. Which one do I pay for if I can only afford one, and why? Like, there's no comparison, I guess. They're two separate things. So I guess I don't know how to, like, just to be completely honest, I don't know how to answer that because I don't know if you care about options flow, or I don't know if you care about the sitting buy and sell orders on the futures market. But they're not in the same universe. They would be used together. They're not at odds with each other. They're not like competitive businesses with it. Like, they're not in competition with each other. Speaking of that, just so you know, today, before you buy anything, go watch the new Spot Gamma webinar. It is 100% free, a teaching webinar, 1 p.m. today. They're unveiling new products, so that might, I guess, give you some information. It is free for everyone. It's at 1 p.m. Eastern today in almost just under 3 hours. So you might want to pay attention to that. Trace Reloaded, April 9th, 1 p.m. ET. Like I said, it is 100% free. You don't have to pay for it. Pinned at the top of chat, in the description of the video. It is today. If you are free today, or honestly, even if you're not, you should sign up anyway, because then you could get the recording. So anyone listening to this who at all is interested in spot gamma or options analytics, or just want to take your trading to the next level, I highly recommend everyone listening to sign up for it, because it's free. And even if you can't attend in real time, I'm sure they'll be sending out a recording to everyone. So just want to put that out there. It is pinned to the top of chat. It's in the description of the video. And also Apex today, 90% off if you use that code Goonie, Goonie. Today is the final training session. This is it. 90% off Goonie, 90% off Apex. That's the code. That's the discount. It does end today. So if you want to get those evals for dirt cheap, this is your time to do so. And the market is... Oil is climbing. Actually, just aggressively, oil got a breakout above 100. Aggressively. And now momentum is actually switching. See, 5 minutes potentially breaking down, 10 minutes testing. 30 minute has a bit of distance to go. But on the NASDAQ, it is worse. The 5 minutes bearish, the 10 minutes bearish, the 30. So like, it's a little bit mismatched, because the 10 and the 10's breaking or it's testing as we speak. I don't know if it's going to break, but the 30 minute has about 6 points to go, which is kind of bringing up the question, does SPX want to go all the way down to 6,750? Something to look at. Something to look at. Speaking of Bookmap, I can see on Bookmap there are a lot of buyers right here at 24975. 24975. 24975. I am not doing well today, but there's a lot of time left in the game. Lot of time. If you can't afford spot gamma, in my honest opinion, you shouldn't be trading options yet. Get Bookmap first. I use both. Like, you use them together, I guess, is like my key argument. And I think that's like a very important thing. Like, they're two completely different things. And remember, if you're at a point where like maybe financially you can't afford something, that's all right. Like, you don't have to be trading right away. The market's always going to be here. So in the meantime, paper trade, work on your strategies. But like, you can save up. Like, you don't have to be, I guess, like pressured into spending this money right away. Why would you use Apex when they haven't responded to your payout? Because payouts of this size always take this long. This isn't out of the ordinary. We're talking about a serious amount of money, and it's just not commonplace. So when it does happen, there's like a big process internally for them that has to get kicked off. I guess if it was abnormal, I would think that it was like a little bit weird, but this is just after speaking to all the other people that I at least could speak to who've gotten 7-figure payouts. This is just par for course. All right, now the question is there going to be a rejection at 25,000 flat? That's the real question. Uh, 3 months, no response. Where'd you get 3 months from? Did I forget how to count, or did you forget how to count? Why is Lucid taking so long to get your live accounts? I spoke to them yesterday. It's actually not them. It's Tradeovate. Tradeovate is having some sort of technical issues converting accounts to live. And so it's becoming a manual process. Is it a rejection right here at 25,000? So I am in contact with them, and they told me that they're optimistic about getting whatever the technical issue is figured out by tomorrow, actually. But it's not on their end. It's on the Tradeovate end. Do I just want to take a stab at this?
Order filled. Order submitted.
All right.
Order canceled.
What order? Why did it say order canceled? Fuck, what's going on?
Order canceled.
Okay, all orders are canceled. I'm good. All the accounts are trading and apparently going against me. What was that order canceled? Why did it say that? I'm a bit confused. Obviously, I'm looking for it to get rejected roughly in this area, but we'll see. What I'm trying to play is the potential start of a new trend right here. The 5 is testing, the 10 is testing, the 30 is bullish, but right here, 5 is breaking down, 10 is breaking down, 30 minutes breaking down. I don't know who's going to win. It's just we're at the point of a potential new one. So if it goes against me, ideally I could cut it quickly. And then if I'm right, ideally I can ride the brand new trend. I don't know if it's going to go my way or not. I was looking at this rejection at 25,000 and you can see how well that is paying off. And by that, I mean not well at all. But it's just back to 25,000 here, which there are buyers at 96. This low. There are, I can see it on Bookmap. There's about 160 contracts to be bought right here at 196. Let's see how strong they are. Yes, no, maybe so. I'm not going to give this much leeway. I just don't have the room, the buffer. These are all relatively new accounts. So like I said, I don't have the room or buffer to give it. We're going to give it a second. Actually, they're all at 25,000 flat now. 160 contracts right here, 25,000. The next group is at 75. And we just took those players out and they actually got a fill. They did not move the order. The next group of buyers, there's a little bit at 80. And then I could see a chunk of buyers at 75. Those are the closest heat map zones, if you will. Those are the closest heat map zones. A little rejection there. A little rejection. Let me do a little quick analysis on this. Okay, what is the pre-market? These are the overnight trading session extremes. We already took out the high right at open. The low was
Connection lost.
Fuck. The low was at 410 this morning, which was around 953. Which did I lose a connection to? That's not good. Tradeify. Trying to reestablish a connection to Tradeify. Did it establish? No. Okay, the connection did get reestablished. So once again, what was that overnight low? The overnight low was exactly 953. So what we're going to do is unload one of ours at, ideally, if the market gets there, at 955. We're going to front run the low by 2 points.
Order submitted.
How the fuck? What? How is this possibly in liquidation mode? Can someone, there's no way, like you guys have seen all the trades. In what way did I possibly break the rules on Tradeify? And the other ones are trading. Someone fucking explain this to me. How? Is it because of the connection? There is no DDL. I picked the other ones. How? Like, you guys have literally seen all the trades. I didn't even come anywhere close to the rules. What the fuck, dude? Did I? I mean, it's not... Wait. Why does this one... Can someone explain this to me that's more familiar with Tradeify than I am? Let me zoom in here. Oh, it's because this is... Why is this one different? Flex funded, flex, daily, flex. It's a different type of account for some reason. Did I just make like some sort of retarded mistake when I was signing up? So this one has a DLL, I think, while the other ones don't. How is that possible that I could have a different type of an account when for flex, and then daily? I must have clicked. Fuck, dude. Well, that was stupid. I don't like those accounts at all. Well, that solves that fucking problem. That it's frozen out because of the daily loss limit. So it's not a blown account. I'm just frozen for the day. I don't like the DLL rule, which is why I chose to use the flex accounts on the other ones. But okay, at least we figured that one out. But it did get weird with the data connection and everything. All right, so the reason I am trading at 55, this is me trading the chart instead of my accounts. Obviously, I was trading my accounts. I would just hold this. I'm trading it at 55 just in case there is a bounce at this pre-market. You know what? Let's go to the 5-minute. The overnight low here at 4:10 a.m. ET was 953. So I am front running it by 2 points at 955, just in case a bunch of, well, never mind. We might not even get there. Just in case a bunch of buyers get in there was what I was trying to say. But a bunch of buyers are stepping in literally right now. So fuck me. But anyway, that is me attempting to shade the chart, saying, okay, this is the pre-market low, the extended hours low. Let's try to be smart about it rather than whatever is going on. I guess I could have sized up even more and target that, but then based on what I'm down on the day, that didn't necessarily seem like the smartest one. IB is locked in now. Did we just break? Okay, no, we didn't break the low. We'd have to take out 64. But the IB is done because it is 10:30.
Connection lost.
Dude, what is... It's Tradeify again. It reconnected that time, though. Having weird data issues with Tradeify this morning, folks. Weird data issues. All right, hang on. Let's look at the IB. Okay, we do have the IB is established now. And the question is, are we going to take out IB low? Oil is climbing. Bitcoin's coming down. Vol, I expect, is not really going up that much. Where are we? Remember, there was this player who very much wants the market below 6740. We have not yet hit this key level of 750. So that would be if you are targeting something on SPX, that's a big level, technical level, psychological level. It's excuse me, the top of the transition zone. So there's still 14 points of meat on this particular bone if that is the play. NASDAQ, Mag 7 had that huge pop, kind of getting faded. S&P 500 kind of got hit, but recovering, but overall kind of choppy. What's concerning to me is the NASDAQ taking a pretty large hit there. Pretty large hit. Oil is up and away. Oil is up and away. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. All right. We just broke IB low. If you are in the Discord, Piper fired on that. 5 minutes breaking down, 10 minutes breaking down, 30 minutes testing. 5 minute did break down, 10 minute did break down, 30 minute did break down, and it even swept that low. 4 hours still bullish on both. 4 hours bullish on NQ, 4 hours bullish on ES, but obviously the shorter time frame stuff, it's looking a bit questionable. We're kind of getting into a danger zone for me because this could just be the bottom, and we could obviously at any point, anything could happen, as I always say. So that's why I'm trying to front run that pre-market low by a little bit. I'm trying to lock in 550 there, which will help me with about a third of what I'm down on the day. Obviously, if I lock in both, that's 2/3 of what I'm down. But what I really plan on doing is locking in there. I'm going to get ideally, I feel like I'm putting the cart before the horse. I'm counting my chickens before the eggs hatch or whatever the fuck the saying is. Oh, is it going to bounce that early on me? Son of a bitch, dude. Come on. I would just love to be able to lock this one in so I could either put my stop at break even or trade the chart and use the recent high. And then maybe I catch a trend. I am a bit frustrated about that Tradeify account. That was really stupid. I'm going to have to trade that account separately from now on. I don't know if their system messed up when I was clicking the buttons, but I never get those accounts. I always do the flex accounts. That's why 4 of my accounts are flex accounts. So at least we got to the bottom of that mystery. But we're not getting to the bottom of the mystery of why can I not get this fill? It's just sideways. We're just hanging out at the intraday low, which is right above this pre-market low. And remember, there's no rule or anything. It's not like you have to hit it. We just got that close, which was a little overextension. I guess just patience. Patience. What else can you do? Your 955 is fine. I feel good about it. Like, especially because I see the NASDAQ still getting hit here in options flow. The Mag 7 doesn't look good either. The SPY is starting to go up, so that doesn't make me feel the best. But I also see, like, we haven't even hit 60, no less 50. So, like, I think the odds are that and also oil is popping, but anything can happen. Like, I feel good about it. I feel the odds of this getting hit are high, but it's not a guarantee. So I would be a lot, I guess, more chill and calm with it if I didn't already have a locked in loss on the day. Like, I'm obviously trying to consider that, but we'll see. We'll see. It's just a bunch of choppiness at this point. We're not doing shit. But I would love to lock this in, lower my risk on the other one. But I would say that the odds are more than 50-50 of 55 getting hit. This is my first profit target. Well, we'll see. Sometimes you might have an idea and the market might have a completely different idea. And that's just something you have to contest with as an active trader. Bitcoin is going down. Nvidia is fine. Tesla got hit. Apple's recovering. Google's going down. Palantir's going down. Meta's flat. TSM popped and gave it back. Avago popped, giving it back. RUM down, Oracle down, Microsoft down. ASML popped, giving it back. AMD, same thing. Amazon's flat, maybe breaking up. Netflix trying to recover. Coin down, MSTR down. Yeah, kind of a brutal situation across the board. All right, come on. What did we get? We got as low as 60. So we got within 5 points of what I need it to be. Come on. Come on. Oil, yeah, oil is going up. Damn, dude, it's just something about it. We're just not testing it. Like, buyers are clearly, either sellers are stopping here and they're fine with this level, or buyers keep defending it. But this is my fear, is an early bounce. Exactly what's playing out is what I was deeply worried about. Not only did we not hit 53, we didn't even crack 60. So even if I was trying to front run it to the tune of 10 points, I would have never gotten that fill. This is not an easy play. Not an easy play. And now I'm pissed off about this account. That was such a fuck up. Iran gonna do something spicy today and we tank again. Possibly. Possibly. Patience. You never know what's going to be happening, but thus far we are finding support at IB, which is 963. The overnight low was 953, so 10 more points. I'm trying to take a fill at 55. So not only front running the 53 low, but also just that level at 50 that people seem to like to play. Lock in a nice 30 points there. So that's about 1/3 of my loss. And then I still have the runner, which at this point, if that were to fill, I'd probably put my risk maybe 85. But also, like I said, this is just choppy. Lot of buyers at 51. I could see on Bookmap, the buyers are set up at 51, 951. So a little bit below my fill, but just because they're sitting there does not mean that we have to go there. And fuck, now I'm underwater on this. Oh, brother. Nothing. Not like we're just not getting that nice trend. I think what's happening here is the refusal of ES to actually switch trend. The 5-minute and the 10-minute are still battling it out. The 30-minute perfectly bounced there. While the Nasdaq did break down. I think what's happening, why this is such a struggle in the Nasdaq to keep going, is because it's this exact level of equilibrium on the S&P 500. Matt getting clapped. I don't know if this is me getting clapped. I mean, I definitely have streamed to you guys having far worse days. I'm just trying to explain why I think there's like quite a bit of choppiness right here. 1 minute's bearish on both. 5 minutes bearish on NQ. ES is testing, as I'm showing you. 10-minute NQ is bearish. S&P 500 is testing. And then 30-minute, it's the exact same thing. 30-minute tested, but the 30-minute here already broke down. So we're getting mismatch information. So a shrewd trader would just sit on their hands until we have agreement across the board. That's what you would do. That's like really what you would do. You wouldn't be betting on the one that's right or betting against the one that you think is wrong. You would sit there and wait, be like, okay, cool. Just let me know when they all agree. Look at Tesla and GameStop. Ask yourself if you think I give a shit about either of those right now. Like really, really sit there and ask yourself if you think I give a single fuck about Tesla or GameStop at this moment in time. Like really, really like sit there, reflect, ponder, and truly, deeply ask yourself if you think I give a fuck at all about Tesla or GameStop as I'm actively trading a shitload of NQ. What is this? 77. I see some sellers at 2005. Are the people still there at 51? Yeah, they are. There's a lot of people set up at 51. A lot of people. Okay. Maybe a little fake out. We had this high at 89, an overreaction to 95. Maybe it fails. Maybe. I would just love to see. Why can't we just snap 77 and puke here? What is this low? This low is, yeah, the low is 77. Fuck. Right there. Even the 100 tick. This is the most, I don't even really trade off of this. I just use this more for stream because obviously every 100 ticks we get a new bar. So it's just something more exciting to watch. But even this, it went a little bit bullish on me. Fuck, is it going to recapture 25,000? If it is, I need to get out. I don't really have many options beyond that. If I was really feeling degenerate about it today, I could have probably doubled down at 25,000. I deeply do hate this mismatch between ES and NQ. I'm betting that NQ is the quote unquote right one and ES is the quote unquote wrong one. But when you're betting on that, you're going to be right half the time and wrong half the time. That is the tough aspect here. Like I said, if I had real balls, I could have added at 25,000. If I had real balls, this chop sucks. Yeah, I don't think it's going to last forever. It feels like there's too much potential energy kind of getting pent up here. It does feel like we are going to get some form of a move. I'm just at the point of praying that I'm on the right side of that particular move. Even this, look at breakout, support. Is it going to find support here? We have this little trend line. You know it's getting bad when you start looking at the trend lines on the 100 tick. That's the definition of desperation. And that's, I guess, where we're at on the show. I would love the breakdown of this recent low right here, 77. I'd feel so much better if we can get back below 77. I'd feel so much better. Fuck. Is it attempting to switch trend here? Guess we'll have to find out. No amount of complaining or whining is going to change it. There's no crying in the casino. Me bitching and moaning is not going to change price action. All I can do is properly react and just get the hell out if it is clear that I'm wrong. Stock maxing. Doesn't feel like I'm stock maxing today. In fact, it feels like I'm maxing, getting my ass handed to me. All right, clearly we don't need
Order canceled.
This. Fuck. Well, we're at 25,000. We did take out this recent high. None of that's good. But the question is, do I just hold it anyway and pray for a rejection somewhere between 23 and 38? Do I hold through it or do I cut and recreate a position there? But what if we don't get there? But this is not doing what I need it to do by any means. Trump's post. It's not a new post, right? Are you talking about from this morning? I don't think he posted because we didn't recently, I should say, because the market would have reacted a little bit more dramatically as it does. Our next, okay, yeah, you're late. The our next conquest thing was not recent. When it comes to the market, it's like kind of stuff that happens like literally in the past like 60 to 120 seconds. Like that's how quick stuff is happening. Honestly, that's even kind of slow. This is not a fucking good day for me. At least not yet. Maybe I should still be, but it's just in reality, like quantifiably, like the evidence we have of what's going wrong and why like I'm not performing today is the mismatch between ES and NQ. I keep picking the wrong one that I think is right and is leading the way, and then it's still just proving to be choppy. Like they're not in sync. They're not telling the same story as I showed you. Like literally just the data we can all look at and measure. ES and NQ are at odds, and good traders, which apparently I am not executing good trades today, would be patient enough and would wait for alignment between ES and NQ. And that's like, I guess, to be self-critical and to explain where things are going wrong for me today. That's literally it. I don't even know. Do I even have enough drawdown to hold the push up to VWAP, or do I have to cut it now? I don't know what to do. Fuck me, dude. This is getting stupid. I shouldn't have been in any trades. Right here, the question is ES right and we're still bullish, or is NQ right and we're still bearish and we're about to get rejected here? Like it's just playing a really fucking stupid game, and I shouldn't have been in this trade. Or actually, no, I take that back. Getting into the trade was fine. I probably should have, when we tapped the IB, I probably should have had a stop at break even and just got knocked out at break even. I actually don't mind the entry because at that moment of the entry, even ES was pushing bearish. So I really don't mind that. I could have managed it better for sure. And right now, I'm basically just praying that ES is wrong. Basically, really what's happening is I'm praying that this little pop here on ES, this 5 minute, this 10 minute fails. I need this to be a lower high like now and it break below these recent lows. I need SPX to basically stop this recovery, put in this not recover, and then puke down to 750. But that was like literally just a trading misstep for me. That was so stupid. So fucking stupid. Matt, now this is a coin flip. Technically, it's always a coin flip. It's just, can you do a coin flip with good risk reward? And I fully accept the fact that I'm always doing a good, like a good, 50-50 opportunity. But what I'm not doing this time is good risk reward. That's what's like missing in this one. It's always 50-50. But where I'm fucking up right now in real time with all of you is not having a good risk reward setup. That's in real time what's going wrong for me. And the question is just, can I either, one of two things needs to happen. I either need to get my head out of my ass and start doing the right thing, or I just need to get like insanely fucking lucky and the rejection needs to happen right here. Like I'm talking insanely fucking lucky. That it should, well, that's not even luck. We've seen VWAP rejections before. I just need that particular event to play out like right now. Like right now. And I don't know if it will. Well, we're at 2 VWAPs. I have to sit here. If it starts to go, I need to get the hell out or I'm going to lose these accounts. But at this point, I might as well sit here and take the punches and see if it does get rejected. All right. What was that spike to? 32. Fuck. Why do I accidentally delete those VWAPs? Not my day. Not my day. If only I had a crystal ball, I would have known to stop after my one little pre-market trade, take my $400 and move on with my life. We're right at the VWAPs. No, I want to be clear. No one knows which way this is going to break. I'm hoping it breaks down. I'm hoping this is rejected. But who knows if I'm right today. If anything, I think the safer move is to do the opposite of what I've been doing today. We're right at it, yeah. Well, now we're climbing up. How much pain can I possibly take? I need this to turn and turn now. But a better question is if it doesn't turn, at what exact value should I just be you know what? I'm wrong. That's the part that I need to start asking myself. What value do I need to see that I just throw in the towel? Fuck, dude, it is turning. I've just had the worst risk reward today. The main thing that I always preach, I'm just letting things go way too far to try to give it a shot. And this is exactly what I deserve. All right, there's the IB. All right, let's get ready to admit we're wrong. And by we, you guys are probably trading better than I am. I'm trading like an absolute fucking dipshit today. I should have cut this fucking miles ago. Miles ago. I guess ES was the right one. Fucking just such weak fucking decision making today. Pitiful performance. Nothing. Not even a fucking chance. Oh, there we go. There's the chance. All right, now I could at least be pretty confident that if we go above this, I'm pretty fucking wrong. And what the hell was that? Okay. No.
Order.
Fuck. No.
Order.
God
filled.
damn it. Fuck. Way too fast. Whatever the fuck that was. Literally, as I was saying, I was trying to use 39 and it had a random fucking pop to 53. This is all 100%. This is so fucking stupid. It's not even the market. Granted, did the market have the nicest trends today? No. But this is all 100% trader dumb fuck error. Without a doubt, just not respecting risk at all, not getting out when I knew I should get out, trading when the trend between ES and NQ was not solidified. Was the market session easy? No, the market session wasn't easy. But if you're always blaming it on the market either being easy or not, you're never going to get anywhere in this world. This was without a fucking doubt. like without a doubt, exclusively on me. Even in this session, the real move was to wait for agreement between ES and NQ. Even if you didn't do that, even if you're like, no, I'm confident whether bullish or bearish, better risk management, like you'd be perfectly fine and you wouldn't be caught up in dumb fucking moves like this. Like without a doubt, like it's all on me. Like there's a much better way to have handled all of this. This is just fucking dog shit, dude. And yeah, now it comes down anyway, literally right at the point. So had I cut earlier, I could have handled this all. But like, it always comes back to just basically poor risk management in one or two, or potentially the combination. You're either oversizing, so you might be respecting your risk levels, but you're playing too large, or on the flip side, you are not respecting your levels. It goes past it and you're not getting out when you should get out, or you're putting those two together. You're trading too big and not respecting your risk levels. So just doing that, not egregiously at every point, like maybe this last one, like I was trying to quickly say, oh, like I was trying to put in the risk there at either 39, there was a quick point and then it knocked me out anyway to go in my favor. That would have never happened had I initially got out when I should have been, or if my sizing was less. So really it's putting those two things together, that the first trade I had, the break-even trade was fine. I tried to play the bounce. I got out of one. I should have got out of two. I was trying to play VWAP a little bit because I thought E was right. Turns out NQ was right. We dipped more. And then I was like, okay, cool. I guess we are dipping. So then I went that way. And then it turns out that ES had more of the power and we're starting to recover. So like, the combination of the ES NQ mismatch and continually being in the wrong phase with that, and then honestly, even without that, just the piss poor risk management, that's what happened. I mean, there's no other way to put it, but like that is quantifiably where everything went wrong. And now with these fucking accounts, I'm not going to be able to catch the good trades. I mean, I guess obviously I could get the evals, but I blew 5 evals and 10 funded. And the shitty thing is they were brand new funded accounts. So I literally just fucking paid for them. God damn it. It's just stupid. Like, I guess the frustration's at myself because I know I'm a better trader. I knew I should be doing better shit. And here we fucking are, like making like, not rather, like I wouldn't say those are rudimentary mistakes, but they're fundamentally inaccurate moves. Like just fundamentally, it is not respecting risk. Brutal. That's, yeah. The frustration is not at the market. The market's going to be, if you're ever mad at the market for doing silly things, that's wasting your time. You're wasting your emotional capital because you're never going to be able to fix any of that. But the frustration should always be solely on yourself, because you're in control of your decision. So my frustration is exclusively that. Is this the easiest trading session? No. I've traded more difficult sessions and I've made more money. So it's not the session and the quality of the session. It is 100% my personal handling of it when I hold myself to a higher bar and know that like what I did was just like objectively the wrong move. Like objectively what I was doing was just inaccurate moves, like without a fucking doubt. So I don't know. I guess the frustration's at myself. So that's it for today's show. I'm fucking disgusted at how I performed because I know I could perform better. And now I have to go buy more fucking evals and I'm stuck in eval purgatory because I'm still frozen out of Lucid, Apex, and FFN. So, I mean, I guess in a certain sense, maybe it's good I'm frozen out because there's a good chance I would have copy traded that to all of them. So whatever. It is what it fucking is. So I'm going to go fuck off with the evals pretty much for the rest of the day and see what I could do. Sorry I didn't perform better. I mean, I felt good dialed in at the start of the day and then shit just went awry. So it just is what it is. Fuck, that's just so stupid. I mean, this session, I should be up. Maybe not by the most. I don't think this was ever going to end up being like a 3K per account session for me. But fuck, man, I definitely could have done better. So it's just frustration of breaking my rules, which is always a frustration for every trader. It's just lack of discipline in doing exactly what you know you should do. But the main message here is never blame the market. The market's going to be the market. And if you're blaming this outside, like external force, it literally just means you'll never be able to fix it because that's something that's not in your control. I beg of you, focus all of your energies on the thing you can control and ask yourself how you can be better, because that's the only way to improve as a trader. If you're bitching and moaning about a choppy market or crazy stuff happening in the market, in reality, you're pushing the blame elsewhere and you're never going to improve. So there's no crying in the casino. Either you just have to quit or you just have to be better. Obviously, I'm not going to quit. That would be fucking stupid. So the only option is to be better. So that's what I have for you. I hope you guys move on or learn from my missteps. We'll be posting content later on today and then streaming once again tomorrow. I'll catch you guys on the flippity flip. Peace.